Good morning, everyone. Can somebody confirm whether I'm audible?
Yes, madam.
Okay, thank you. Right, good morning again. Today I'm not switching on my camera. Actually, I'm down with that viral flu, so I look terrible. And I'm not switching on the camera, but we'll conduct the session like this. I'm sorry about that. Okay, so I'm going to now. Last week you had the session with Dr. Nuwan Gunaratna, and I started the first one. And if you can remember, we had two parts in our first session: introduction to cost accounting, and then cost terms and classifications. That was our second part, and we couldn't complete the second part. So today, first of all, I will complete the second part, and then we'll move on to the session 3 materials. And I hope you received the Excel sheet I shared with you in the WhatsApp group. If you have not downloaded it, please download it, that Excel sheet. For session 3, you will need that Excel sheet for computations. All right. So let me go to the relevant slide. So cost terms and classifications. If I just refresh your memory, we discussed what is a cost, what is cost, and then what's a cost object. And I told you cost object is not only a product. Normally we say like product is the only cost object. That's not the case. Cost object is anything. If we can take the cost of something, that is the cost object. So we did some activities. I asked some questions, and then I told you there are different classifications for cost. So direct and indirect cost, that classification is one type of classification. Right. Uh, Yes. So direct and indirect classification is one type. And then I told you direct cost means if you can specifically, exclusively identify a cost with the cost object, that is direct. If not, that is indirect. And I told you one common name for indirect cost, that is overhead cost. You can say overhead cost as the indirect cost. Right. So, and then we discussed this classification as well. Direct, you can say direct material, labor, direct other. And then when it comes to indirect cost, in other words, overheads, you have two types of overheads: manufacturing overheads and non-manufacturing overheads. So, non-manufacturing overheads, basically we can classify into four: admin, selling and distribution, finance, and other. I told you these are expenses. We simply term them as expenses, and we record these expenses in the profit or loss statement. Go to P&L, right? Now, if you can answer one of my questions that we discussed previous week, when it comes to inventory valuation, when we value inventories in an organization, do we add non-manufacturing overheads to that valuation? Do we add non-manufacturing overheads to inventory valuation? What is your answer? Exactly. No, we don't add non-manufacturing overheads. We take the direct cost and manufacturing overheads only for inventory valuation. So non-manufacturing overheads, we park these non-manufacturing overheads in the P&L, right? And then with that, I'm moving to this slide. So this is what I told you. Direct materials, direct labor, direct other, all these are direct cost. So you can take total direct cost. And then when you add manufacturing overheads, you can take the total manufacturing overheads cost. And then you can later add non-manufacturing overheads, later consider non-manufacturing overheads, then you can calculate the total cost. This is what we usually calculate. Right. So with that, I'm moving to the second classification. This is based on, now we did one classification, direct and indirect. Second classification is based on the cost behavior, how the cost behaves. right, in an organization. Based on that cost behavior, we have four types. What are the four types? Variable cost, fixed cost, semi-variable, and step fixed cost, right? There are four types based on the cost behavior. Now, variable cost, that's easy. Variable cost, if we take total variable cost, look at the first graph, total variable cost, it is like it is a straight line, it would be a straight line, and it's going up. When the number of units increases, the total variable cost will also increase. Let's say uh, variable cost per unit is 30. Variable cost per unit is 30. So when we are increasing the production from 100 to 300 to 1000, variable cost also increasing. So it's going upward line, total variable cost. But when you think about the unit variable cost, what do you mean by unit variable cost? Variable cost per unit. Does that change when when we are increasing the production or when we are decreasing the production? Unit variable cost, does it change or not? It doesn't. It doesn't change. It is the same, 30 rupees per unit. So it will be a constant line like this. So when even though you are increasing or decreasing the production, your cost would be the same, unit variable cost. And remember one important thing, unit variable cost doesn't touch this vertical line. It doesn't touch the line. What is the reason for that? That means if this orange color line, this line touch this vertical line, where cost line basically, that means when the production is zero, cost is this much. Let's say 30. Let's say we have 30 here. So it says when the production is zero, cost is 30. Why don't we touch this vertical line? What is the reason for that? Why don't we start the line from this 0 point? Zero, we don't have a cost here. Maybe it starts after zero. What is the reason for that? Okay, the reason is, yes, exactly. The reason is when the production is zero, there is no variable cost. So we can't say when the production is zero, unit variable cost is like this. Production cost, variable cost starts, right? Variable cost starts with at least one unit. Okay, so that's why when the production is zero, there's no cost. And then I'm talking about variable cost. I'm still talking about variable cost, right? Likewise, it's like this. It starts after zero. So this is variable cost, total variable cost, and unit variable cost. Look at the second one, fixed cost. When it comes to fixed cost, let's say the total fixed cost. Let's say the total fixed cost. Total fixed cost doesn't change. That's why we call it fixed. It is constant. It remains constant over the period or the production given range. Remember, for a given range, not forever, but for a given range, fixed cost would be the same. Total fixed cost would be the same. Let's say, do we have to use the term unit variable cost? Uh, Now, let's say total variable cost and the unit variable cost. Not necessarily, but variable cost, when we differentiate between total and unit, you have to mention unit variable cost and total variable cost. I hope that's the question. If not, if it is not clear, you can ask again. And then fixed cost, total fixed cost is constant. Let's say the fixed factory rent is 100,000, that is fixed. Even though you are producing zero units, even though you are producing, let's say you are producing 1,000 units or 10,000 units, that doesn't matter. For that particular factory, factory rent would be 100,000, irrespective of the number of units you produce. So even when you are producing zero units, that means no production at all, still you have to pay the rent. That's why it is constant and it starts with 0 and it's not going upward as total variable cost, it is constant. But look at the unit fixed cost. Unit fixed cost. Fixed cost per unit. What happens here? Can somebody tell me what is the reason for this type of line? What is this behavior? Unit fixed cost. That means when you are increasing the production, unit fixed cost slowly getting reduced and it has a curve effect. It's not a straight line. It's a curve effect. First of all, tell me why the production, when we are increasing the production, why this unit fixed cost decreases? Exactly. The cost is getting distributed. That's the correct term. In other words, we can say economies of scale as well, right? So in that case, let's say 100,000. Let me open up an Excel. Your factory rent fixed. Your fixed factory rent 100,000. And then when your production was 100 units, what was the unit fixed cost? How can we calculate the unit fixed cost? We take 100,000, divide by 100 units, 1,000 per unit, right? 1,000 rupees per unit. But the fixed cost would be the same. The second scenario, you are increasing the production to 10,000 units. 10,000 units. Then what is your unit fixed cost? 100,000 divided by 10,000, 10 rupees. 10 rupees per unit. So as you can see, when the fixed cost is constant, when the fixed cost is fixed, constant, and when you are increasing the production slowly, unit fixed cost is getting decreased. It is getting reduced. Why? The distribution happens. More spread, more distribution among 10,000 units. Previously, 100,000 should be bared by 100 units. Now you have 10,000 units. Like this is the reason. And why this curvy effect? Why it is not a very straight line? It is not a straight line. It is a curvy effect because we can't exactly say when we are increasing the cost, when we are increasing the production, we can't exactly say the unit fixed cost would be the same like this. It is going to have a curve effect, and after some time, after one point, you will not see this reduction, right? After some point you will not see that reduction. You can't say unit fixed cost is 0. So that's why you can't touch this horizontal line. You can't say unit fixed cost is 0. Still there's a cost. Even though you are increasing the production, you have a cost. Unit fixed cost would not be the 0. So that's why it's not touching the horizontal line, and it is going to be a curve effect. Gradually, the cost is getting decreased, right? So this is the reason. I hope I'm clear. If not, you can ask the questions. Right. So we discussed total variable cost and the total fixed cost. Now I'm moving to the next one, semi-variable cost. Semi-variable cost, in other words, you can say mixed cost. The importance is, the beauty of this is, you have both variable and fixed components in mixed or the semi-variable cost. You have both. You have both characteristics. Look at the first graph. Look at the first graph. See, here, this is 0. This is 0. When the production is 0, you have a cost. When the production is 0, you have a cost. That's why the line starts from here. Let's say 10,000. When the production is 0, you have a cost. And when you are increasing the production, cost is getting increased like this. So, can somebody tell me what is the fixed component here? What is the fixed component here? Let's say this is A This is B. This is C. These are the points. So what is the fixed component? A, B or B, C? Fixed cost component. A, B or B, C? A to B. Exactly. A to B would be the fixed cost. So what is the variable cost component? B to C, isn't it? So this would be fixed. This would be fixed. And then this is your variable cost. So even when your production is zero, still you need to have you have a cost. And when you are increasing the production, your cost is getting increased. Can I have some examples for this type of an cost, mixed cost? We have both fixed and variable components. That means you have a fixed cost. And then when you are increasing the production, when you are increasing the activity levels, your cost is getting increased. One simple example. Rental and the at the usage. That means what is that rental for? What about our telephone expenses? Telecom payments, telecom bills. What do you think about it? What do you think about it? Do we have a fixed cost for telecom, like telephone bills? Do we have a fixed cost? Even if you are making zero calls, still you have some amount to pay. Am I right? Even if you are not using the phone at all, still you have some amount to pay. So, right? So that is fixed. It is fixed. And then when you are increasing the number of calls, when you are taking more and more and more calls, your cost is getting increased. So I hope that example is clear. If you have more clearer examples, just tell me. You have a fixed cost, and exactly this is good. In a garment factory, at admin staff salary versus OT paid to direct labor. That means yes. Now, let's say let's take one employee. Let's take one employee, and then let's say uh, that the company is paying a fixed salary for that particular employee, right? The company is paying a fixed salary monthly, fixed monthly. Monthly one amount is fixed. That is 25,000. 25,000. And then when this employee, let's say this employee is working in the production floor, when this employee is manufacturing one unit, for every unit, we are paying 10 rupees each. 10 rupees each. What do you think about this now? Monthly fixed cost is 25,000. And then for every unit this employee manufactures, we are paying 10 rupees. Now, what is this cost? Now, even when the production is zero, we have to pay 25,000 rupees because this is the fixed monthly salary. And when this employee is making more and more units, per unit 10 rupees. Likewise, if that person is manufacturing 100 units, you have to pay 100 multiplied by 10,000. If that employee is manufacturing 200 units, you have to pay 200 multiplied by 10, 2,000. Likewise, the cost is getting increased. So do you see? That is mixed cost. You have both components, fixed and variable. So these examples are correct. Yes. Car rental, yeah, sometimes it is fixed it is fixed. Oh, okay. Car rental would be more appropriate in my next example. We'll explain that, then you will understand. Right, exactly. 25,000 K is the fixed cost, per unit pay is the variable cost. Now look at the second graph. What is there? In my second graph, it says up to some point, up to a certain production level, maybe this level, cost is fixed. And when you go above or when you exceed that level, your cost is getting increased. So can I know what is the fixed cost component and what is the variable cost component? What is fixed cost component? What is variable cost component? Fixed cost component, what is that? A to A to B. This is fixed cost. See, this is fixed. This is fixed. And then after some point, the cost is increasing, that is variable. So A to B is fixed, B to C is variable. Now, shall we take that car rental example for this? Can we apply car rental example for this situation? Up to certain kilometers, right? Up to certain kilometers, your rental would be fixed. Let's assume up to certain kilometers, your rental would be fixed. And then when you are exceeding, you will have to pay for each and every kilometer, right? So that is how it goes. I hope that example is clear. Okay? Yeah. Cost will affect not only if you exceed the kilometer rental will be, yes, exactly, correct. So that is how the mixed cost works. There are so many examples, right? So you can take, it can be like this or this, both are mixed cost. And then next one, step fixed cost. Step fixed cost. So this is like a step fixed cost. How can we explain this? Now, we are at zero here. At zero, there's a cost, let's say 1000, 1K, right? 1K, 1000 rupees. And then up to some point, up to this point, the fixed cost is the same. The fixed cost would be the same. It is fixed. And then when you increase, when you exceed this level, suddenly there's a cost increment, suddenly there's a cost increase, and then cost again would be fixed. It is increasing, again fixed, up to some point. And then again, suddenly there's an increase, again cost would be the same. That means cost would be fixed. So step fixed cost, it is going like a step. Can I have an example for this as well? We starts with one particular, one type, one amount, like fixed cost, let's say 1000 rupees, sudden increase, again, let's say 2000 rupees, sudden increase, again, 3000 rupees, fixed cost. Can I have an example for this? Yes, correct. If I take this example, is this clear? Check whether this is clear. Now let's say we have we have rented a factory building. We have a small factory. It is on rent. So we have to pay monthly 10,000 rupees. Monthly 10,000 rupees. Sorry about that. So monthly 10,000 rupees we have to pay. That is fixed rent. It's a small, actually it is a small space, right? Small space. And then, so until we use this small space for 10,000 rupees monthly, our fixed cost, factory rent would be 10,000 rupees. That is fixed. And now, next month, we are getting a new order. For our production, we are getting a new order, and this factory space is not sufficient now. This space is not sufficient now. So we have to rent out another space. Like let's say in the same building, we have a available shop, available floor next side, next door. So we are taking that part as well. That part as well. Now tell me, previously when we had only one space, one floor, 10,000 was the fixed cost. Suddenly, when you are taking the second floor as well, what is the fixed cost now? What is your fixed cost now? You had to pay 10,000 for this, and now additionally you have to pay another 10,000, because when you are increasing the capacity, because your first capacity was not sufficient, so you are renting out another space, so your cost doubled. Now 20,000. Now 20,000 rupees monthly fixed cost. Let's say you are utilizing these two spaces for some period, and then with that production, when your growth in your business, these two spaces are not sufficient now, you have to rent another space, you have to get another space like this. Now again, you have to pay rent again 10,000. So suddenly, previously the cost was 2,000. Suddenly, your cost increases and it becomes 30,000. So it would be fixed until you add another space, it would be fixed. So when you had only one space, it was only 10,000. Suddenly you are renting out another space, it becomes 20,000. It is fixed. It would be fixed until you increase your capacity next time. So another space you are taking, after some time, your 20,000 becomes 30,000. Sudden increases and it is getting fixed. So these are like step fixed cost. Steps. Cost is behaving like steps, staircase. So are you clear with that example? That is a step fixed cost. Okay, right. So I hope others are also clear. Right. So those are the four types actually based on the cost behavior. Now you understand variable cost, fixed cost, mixed cost, and then step fixed cost. So different types of cost. Right. So with that, we have covered now direct, indirect, and then based on the cost behavior also there's a classification, and then relevant and irrelevant cost. This is also one type of classification in cost and management accounting, relevant and irrelevant cost. So basically relevant cost means relevant cost are those future costs that will be changed by a decision. If that cost is going to be changed with a decision that will be made in future, that would be relevant cost. And the opposite is irrelevant cost. Irrelevant cost are those costs that will not be affected by a decision. So this would be more clear when you try this activity 4. Just try to answer the questions, then relevant, irrelevant cost would be much clear. Shall we read the question? ABC company purchased rupees 20,000 worth of raw materials a few years ago. Okay, so remember the amounts. Purchased 20,000 worth of raw materials few years ago. Currently, there is no possibility of selling these materials or using them in future production. Currently, there's no use. Recently, a customer saw these materials at the company premises and requested the company to sell those materials to him. However, this customer is not prepared to pay more than 12,000 rupees. The additional cost of 5,000 rupees would be required to change these materials according to the customer's requirement. That means if we decide to sell these material stock to this customer, we will have to spend additional 5,000 rupees to change the materials according to the customer's requirement. Okay, this is the scenario. Now decide what are the relevant costs and revenues? What are the relevant costs and relevant revenues in this case in relation to the decision of selling or not selling these materials? Think and give me answers. Now, first of all, if you decide a cost or anything in this world, relevant or irrelevant, if you are to decide whether something is relevant or irrelevant, first of all, you need to understand one thing. That is, what is the decision we are going to make, right? The same one, some particular cost can be relevant for some decision, but the same cost can be irrelevant for another decision. Remember, when you are classifying cost into relevant or irrelevant, first of all, you need to understand, okay, what is the decision I'm going to make, right? So in this example also, what is the decision you are going to make? I have given that clearly. What is the decision you are going to make in this scenario? Whether to sell this old material stock to this customer or not. That is the decision. Now, when you are making that decision, what is relevant and what is irrelevant? So, first of all, identify what is the relevant cost and revenues. Remember, the decision is important. Now tell me, 20,000 worth of stock they have purchased few years back. So that cost of purchase, the cost of these raw materials, 20,000 rupees. Is this relevant or irrelevant? 20,000 rupees relevant or irrelevant? Now the decision is whether to sell the stock to this new customer or not. So when you are making that decision, the purchase cost of this old material stock, which is 20,000 rupees, is it relevant or irrelevant? Exactly. This 20,000 is irrelevant now. Can you change that 20,000 rupees with this decision? Now look at the definition again. This definition was relevant costs are those future costs that will be changed by a decision. So whether you decide to sell the stock or not to sell the stock, that 20,000 doesn't change. So that 20,000 is not relevant anymore, right? It is not relevant. That is why 20,000 is irrelevant. Irrelevant. What about 5,000 rupees? You had to incur 5,000 additional cost to change the materials according to the customer's requirement. That 5,000 rupees relevant or irrelevant? When you are deciding whether to sell these materials or not? Exactly, that is relevant. That is relevant because it is a future cost and that you can. Yes, relevant. Yes, relevant. So that is a future cost, and then you can change that 5,000 rupees. If you are deciding to sell that stock, you will have to spend. If you are deciding not to sell the stock, you don't have to spend. So it is relevant. What about this 12,000 rupees? Now customer is prepared to pay 12,000 rupees to you when that person is buying the stock. Is that relevant? Now, it is not cost, no, obviously it is revenue. Is that relevant revenue or irrelevant revenue? Is that revenue relevant? Exactly, that is relevant. Because if you decide to sell the stock, only you will receive that 12,000 rupees. It is something future and you can change that. You can influence that. So 12,000 would be relevant revenue. Okay, relevant revenue. So what are the relevant costs and revenues in this case? 20,000 is not relevant, it is irrelevant. And then 12,000 is relevant revenue, 5,000 is relevant cost. Now, the second question, should company sell these materials to the customer? What do you think? Should we sell these stocks or not? What do you think? What is your decision? Yes or no? Should we sell these materials or not? Yes, we have to sell. What is the logic behind that? Now tell me, if we decide not to sell this stock, if we decide not to sell this stock, what is the loss we make? If we decide not to sell, we are not selling, then what is our loss? 20,000 would be loss because we have incurred 20,000 rupees in the past to purchase this material stock. If you are not selling, that means we are not getting anything back because we can't use it further. 20,000 would be loss. But if we are selling this stock, what would be the loss? If we decide to sell this stock, what would be the loss? I want that amount. What would be the loss? What would be the loss? If we are not selling, 20,000 is the loss. If we are selling the stock, what would be the loss? Okay. So what is the amount we actually gain by selling this stock? What is the actual amount we are gaining? Exactly. Now, we are selling this stock at 12,000 rupees. That is the revenue we generate. But at the same time, you need to remember when we are generating 12,000 rupees as the revenue, we have to incur 5,000 rupees as the additional cost. In that case, what is the net revenue we gain? What is the net revenue we receive? 12,000 minus 5,000, 7,000 rupees. So we are getting net 7,000 rupees. So in that case, 20,000 was our cost, raw material cost. We can recover 7,000 rupees. Our net loss would be only 13,000. Our net loss would be only 13,000. So if we do not sell the stock, our loss would be 20,000. But if we are selling the stock, our loss would be only 13,000. So by selling the stock, by selling this old stock, we can reduce our loss. Not gaining profits or anything, but we can reduce our loss. In that case, we have to sell this stock. So that is the logical argument behind that. Because we can reduce the loss, we have to sell this stock. Good, correct. Thank you very much for your answers. So that is what we discussed. Right. And then we are moving to the next type of cost, sunk cost. Now, when you were answering, most of you gave the correct answers with the sunk cost, but I didn't mention that word because I'm going to teach you sunk cost next. So sunk cost, what is sunk cost? Sunk cost means already spent, a cost of resource already acquired, where the total will be unaffected by the choice between various alternatives. Now you can't change anything with the sunk cost. Already done, already spent. So they are the costs that have been created by a decision made in the past. As a result of a past decision, you have already spent this cost, and that cannot be changed by any decision, right? Sunk, already gone. Now, in the previous example, what is the sunk cost here? What is the sunk cost here? In the previous example, some of you actually answered that. Sunk cost is 20,000 rupees because you can't change anything. As a result of a past decision, that 20,000 rupees already spent, that is sunk. Sunk cost. Okay, 20,000 is the sunk cost here. This one. All right. Do this activity. Read the activity and then it would be more clear. Activity 5. Cecil Limited entered into a rent agreement with a building owner on 30th June 2024. Let me get the details to the Excel sheet. 30th June 2024. Okay. Sorry about 2024. Right. So Cecil Limited entered into a rent agreement with a building owner on 30th June 2024. As per the agreement, 20,000 monthly rent should be paid for a minimum of 1 year. 20,000 monthly rent should be paid for a minimum of 1 year. It further says that the agreement cannot be cancelable. In November 2024, that means in November 2024, The company incurred 50,000 rupees for a project proposal to evaluate the feasibility of purchasing a new building. So while you are in a rent agreement, the company has done a feasibility study to check whether you can purchase a new building. What was the cost? 50,000 was the cost. In December 2024, now you are in December 2024, the company is considering whether to purchase this building or continue to use the rented building. So by that time, you have made several decisions, but in December this 2024, the company is considering whether to purchase the new building or to stay in the rented building. What is the sunk cost of this decision? What is the sunk cost of this decision? What is the sunk cost? Now, the decision will be made in December 2024. What is the decision? Whether to continue the rented building or to purchase a new building. So what is the sunk cost in this decision? Give it a try, then I'll explain. Sunk. Sunk means what? Already paid. Already gone. Sunk. Hi everyone, am I audible? Yes, thank you. There was a power interruption and I got disconnected. It's very windy here. I don't know whether it's the same for you guys. Right. So, what are the answers? What is the sunk cost of this decision? Sunk cost. Now, first of all, this company, this CCL Limited, has entered into the rent agreement on 30th June 2024, and it is clearly, yes, it is clearly mentioned that it is that rent should be paid for minimum of 1 year and that agreement is not cancelable. So 20,000 is the monthly rent. So what is the agreement ending date? Can I know the date? Agreement ending date? Agreement ending date after 1 year? 30th June 2025, exactly. 30th June 2025. So now we are at now we are at December 2024, right? We are at December 2024, and now we are thinking whether to go for the new building or whether to stay in the same rented building. Now, by this time, how many months have passed? How many months gone already? By this time, how many months? 5 or 6? 5 or 6? Now we have spent, we have entered into the rent agreement on June 30th. No, that means July, August, September, October, November, and December. So 6 months, right? 6 months. 6 months. So in that case, when you are in December 2024, let's assume at the end of December 2024, what is the rent you have all, what is the total amount of rent you have paid? What is total rent amount you have paid? 20,000 into 6, 120,000. I'm confused. Why 240,000? Most of you are saying 240,000. That's my concern. What is the monthly rent? It is a monthly rent. It's not paid at once. It is a monthly rent. 20,000. So 20,000 into 6, is that 240,000 or 120,000? I'm asking what is the total rent amount you have paid up to this point? 120,000, isn't it? 120,000. I hope I'm clear. 20,000 multiplied by 6, 120,000 already paid. Already paid. So in that case, what is this? What is this? You call this cost what? Sunk cost. You call this cost sunk cost. At the time, by the time you decide at the end of December, let's say, you are thinking whether to go for the new building or stay in the rented building. By that time, you have already paid 120,000 rupees, 20,000 monthly for 6 months, sunk cost. This is sunk cost. Right. Now I know you have a problem. How many months left in this agreement? How many months left? 6 months, right? 6 months gone, 6 months left. 6 months left. That's true. That is your problem now. Have we paid any amount for these 6 months? Have we paid any amount for these coming 6 months? Have we paid any amount? No, we have not. We have not paid, right? We have not paid. It is monthly. We call it monthly rent. So in that case, balance 20,000 into 6, 120,000 will have to pay. Will have to pay. Is this sunk cost? Is this sunk cost? Can we take a future amount that is yet to be paid as a sunk cost?
Excuse me, just to clear,
Yes.
the beginning, the question says 20,000 monthly rent should be paid for a minimum of 1 week. So
Yeah.
we have to pay 240, 100 rupee.
No. So that is like 20,000 monthly, month-wise you have to pay for minimum 1 year. Did you understand that you have to pay 20,000 into 12, 240,000 upfront?
No, not really.
Yes, that's the case, I guess. No, 20,000 monthly rent, you have to monthly pay for minimum 1 year. That's how I take.
It means the agreement should be minimum 1 year, right?
Yes, for a
Yeah, right.
minimum 1 year,
Right.
and it is not cancelable.
Yes, got it.
Okay, it's good that you clarify. So, yes, that's the correct issue. I think there were some assumption issues. Yes, that's okay. So, if I assume in this way, now you got my point, no? If I assume that 20,000 monthly, you are paying the rent monthly, and for minimum 1 year, that is, it is not cancelable. So, you have to stay for 1 year. So this amount, my point is, the amount you have paid is sunk cost. The amount you are yet to pay is not sunk cost because it is not, that amount you have not paid yet. That one you call committed cost. Some of you has already said that, committed cost. You are, even though you have not paid this amount, the balance 120,000, since the rent agreement is not cancelable, you are committed to pay this 120,000. But you can't say it as sunk. It is not sunk. It is committed. So that is another type of cost. It is committed cost. Yes, as Mr. Manjul has correctly mentioned, it is committed. So are you clear? Right? Okay, so we have another part here. What about this 50,000 rupees now? In November 2024, in this month, feasibility study, feasibility test. That amount is 50,000. What is that? It is 50,000. It is clearly sunk cost. It is clearly sunk cost, this 50,000. Sunk. So, are you clear? 120,000 already paid is sunk. 120,000 yet to be paid is committed cost. It is not sunk. But 50,000 feasibility test amount, that is sunk because you have already paid. Right. Yes. Total sunk cost would be, yes. The total sunk cost would be how much? 120,000, the amount you have already paid for rent, and then the 50,000 feasibility study cost. Altogether, that is the total sunk cost. Total sunk cost. Correct. So I hope you are clear with this assumption issue. Anyway, are you clear? Right. Yes. Thank you. Okay. So that is how we classify sunk cost and irrelevant cost and all these committed cost. Now I have another question. Provide an example to a situation where the irrelevant cost is not a sunk cost. Now, previously, can you remember in this stock 20,000 worth of raw material stock example, I told you you have spent 20,000 in the past as a decision of as a result of a past decision, and that we can't do anything with this 20,000, and it became irrelevant. As you can remember, it became irrelevant, and I told you it is sunk cost. It is irrelevant and it is sunk cost. Now my question is, give me an example where irrelevant cost is not a sunk cost. Irrelevant cost, but it is not a sunk cost. One example, please. Irrelevant cost is not a sunk cost. Let me explain my example. Then I think there are good examples in the chat box as well. My example is, now let's say you have in your production flow, your production factory, you have to buy a machine. You have to buy a machine. Now you have two options. You have machine 1 and machine 2. Now you have to decide which machine to purchase. You have two options, which machine to purchase. Now when you take the purchase cost of these two machines, machine 1 is 100,000, machine 2 is 120,000. When you take annual maintenance cost of these two machines, machine 1 10,000, machine 2 is also 10,000. Now, when you decide which machine to purchase, what is irrelevant? What is irrelevant? Purchase cost or the annual maintenance cost, or both or none? Exactly. Yes. What about others? Purchase cost. Now, you have not purchased this. You are yet to purchase. Now you are still making a decision which machine to purchase. When you are making that decision, what is relevant? Your purchase cost, which is 100,000 or 120,000. Based on the machine, the purchasing cost is different. And you have annual maintenance cost, 10,000 and 10,000. So tell me whether this purchasing cost is relevant here when we are making this decision. Do we have to consider that purchasing cost? Yes, we have to consider. Why? 100,000 machine 1, 120,000 machine 2. So we have to consider whether we are going with machine 1 or 2, what is cheaper and all, if we are thinking about the cost factor. But what about annual maintenance cost? Do we have to worry about the annual maintenance cost? Is it that relevant in this decision? It is not relevant. Why? I'm saying it is not relevant. Why? Why do I say that annual maintenance cost is not relevant and it is irrelevant in this decision? Why? So do you have to worry about annual maintenance cost? My answer is annual maintenance cost is not relevant here because it is the same. Even if you are purchasing machine 1 or machine 2, irrespective of the machine you purchase, you have to spend 10,000 rupees annually, right? You have to spend 10,000 rupees annually. It is not relevant now. It is irrelevant because it is the same for both options. So you don't have to worry about it. Anyway, you have to spend that. So you do not have to consider that point when you are calculating the total cost, why you are purchasing machine A or machine 1 or 2. Annual maintenance cost is the same. So it becomes irrelevant in that situation. So remember, we have to decide all these relevant, irrelevant factors, everything with the decision we are making. We are deciding, what was my question? We are deciding which machine to purchase. In that decision, annual maintenance cost is not important, not relevant. Why? It is the same for both machines. So that is the story. Are you clear? Remember, always we are categorizing or labeling cost as relevant, irrelevant, sunk, everything based on the decision. My decision, whether to buy machine A or machine 1 or machine 2. In that decision, annual maintenance cost is not relevant. Why? It is the same for both machines. So I hope that is clear. If not, you can clarify. So this is the reason, right? It is not relevant. But tell me, I'm saying annual maintenance cost is irrelevant, not because it is a sunk cost. It is not a sunk cost. Now, question was, you have to give an example for an irrelevant cost where it is not a sunk cost, right? So is this sunk annual maintenance cost? Is this a sunk cost? Annual maintenance cost, is this a sunk cost? No, it is not a sunk cost. You have not spent that amount, still you have not purchased the machine. So you have not, right? You have not. It is not a sunk cost, but it is an irrelevant cost. That is one example. There are so many examples, but it is only one example, right? Okay. Last cost, no, not the last. One before the last, opportunity cost. Opportunity cost. What do you mean by opportunity cost? Opportunity cost means when you have more than one alternatives, right? When you have more than one alternatives, let's say alternative 1, alternative 2 and 3, alternative 2 and 3. When you have more than one alternative, when you pick one alternative, let's say I picked one alternative, what is the value of the next best alternative foregone? When you are picking alternative number 1, you had to sacrifice alternative 2 and 3. So opportunity cost means when you are selecting one alternative, what is the value of the next best alternative foregone? If the next best alternative is alternative number 3, what is that value? That is the opportunity cost, right? That is the opportunity cost. Look at this activity, activity number 7. Try to read and give me the answer. It says a company has received a special order from a customer to produce 750 units of a customized product. So let me take the numbers again. That's easy. 750 units of a customized product. That is the order quantity. This special order requires an additional variable cost of 20,000 rupees. Okay. Additional variable cost 20,000 rupees. 750 is the quantity, units. Now, additional variable cost 20,000, that is not unit variable cost, that is total additional variable cost. To produce 1 unit of this product, 2 machine hours are required. 2 machine hours. 2 machine hours. Currently, machines are working at their full capacity. Okay, in this company, all the machines are working at their full capacity. If the special order is accepted, the current output of product A, that is the standard product they are currently manufacturing, will have to be reduced. So if you are accepting the new order, you have to reduce the quantity of the current standard order, standard product, and then accept. To produce 1 unit of product A, that is your standard product, 1.5 machine hours are required. For product A, you need 1.5 machine hours. The contribution per unit of product A is 30 rupees. The contribution per unit of product A, 30 rupees. 30 rupees. Okay. Now in that case, find the opportunity cost of fulfilling the customer's order. How much is the opportunity cost of fulfilling the customer's order? That means this new order. How much is the opportunity cost? Now, what are the 2 alternatives we have in this scenario? What are the 2 alternatives we have in this scenario? To accept the 750 new order or to reject this 750 units of new order, to accept or reject. So if you accept, if you are fulfilling this customer's order, what is the value of the next best alternative foregone? What is the amount you are going to sacrifice just because you accept this 750 units of new order? What is the value? You had to produce 750 from the new product, new customized product. You need 2 machine hours to manufacture 1 unit. But when you take the current standard current standard product, that is product A, you need to spend only 1.5 machine hours. How can we take the approach here? How many machine hours we need to manufacture this new order? How many machine hours we need to manufacture this new order? 750 units multiplied by 2 machine hours, isn't it? Total machine hour requirement. Total machine hour requirement for new order, that would be 2 machine hours multiplied by 750, 1,500 machine hours, right? 1,500 machine hours. Yes, correct, 1,500. So if you need 1,500 machine hours to produce this or to accept this new order, how many units of product A you need to sacrifice? How many units of product A you need to sacrifice? If you take 1,500 machine hours, how many units you are going to sacrifice? So we can take, we need 1,500 total hours, but to produce 1 unit of product A, you need 1.5 machine hours. That means if you divide 1,500 by 1.5, 1,000 units of product A, you will have to sacrifice. Will have to sacrifice. 1,000 units you have to reduce. That means you have to reduce the production by 1,000 units in product A and then accept the new order. So what is the value of that? What is the value of that? The value is given. Contribution per unit product A is 30 rupees. Contribution per unit of product A is 30 rupees. We will be explaining these contribution and all these concepts in the 6th session or 5th one, probably. But for now, I would say contribution means the value, the amount you contribute to the company's cost. Basically, the net amount you receive. For now, you can understand the concept like this. If you don't know the concept, if you know the concept, you know that contribution means selling price minus variable cost. So you can take the value as 30 for now, for this example. So what is the total amount you are going to sacrifice? 30, that is 30 for 1 unit, 30 multiplied by 1,000 units, right? 30 multiplied by 1,000 units, you are going to sacrifice 30,000 rupees. That is your opportunity cost. If you accept the new order of 750 units, you will have to reduce your current production by 1,000 units. The amount you are going to sacrifice, the amount you are going to lose would be 30,000 rupees. 30,000 rupees. So that is your opportunity cost. Now tell me, what is the minimum price that should be charged to the order? Let's say now you have calculated you are going to lose 30,000 rupees if you are going to accept the new order. And now my question is, if you had to give a price for this order, what is the minimum price that should be charged? Considering only the information given in this scenario, all right? There can be so many other amounts, but considering only the information given in this scenario, what is the minimum price that should be charged to this order? Minimum price. Correct. Do you have to recover these 30,000 rupees first of all? Because we are going to lose that 30,000 if we accept this new order. So do we have to recover this 30,000 first of all? Yes, of course. We have to recover this 30,000 rupees first. So 30,000 should be minimum there. Plus, we have additional variable cost. If we accept this special order, we have to pay 20,000 additional variable cost as well. So don't we have to recover that as well? We have to recover that as well. So in that case, what is the minimum price? At least we have to charge 30,000 opportunity cost and this 20,000 additional variable cost we have to recover. In that case, total 50,000, right? Total 50,000 would be the minimum price. There can be so many other cost elements coming, but just I'm saying with the information in this scenario, minimum price would be 50,000. Are you clear? The response rate significantly dropped. That's why I'm asking. Are you clear? Minimum price would be 50,000. You have to recover the opportunity cost first. So, like when your organizations also, have you experienced such situations? You have to you have to sacrifice your current production or current service level. And if you are accepting a new one, let's say, in that case, when you are charging the price, you have to always calculate the opportunity cost. What is the amount you could have received if you were continuing your current production, right? So do you have any experience to share in this scenario? This is a very interesting area. Any Any experience to share in a situation like this? Okay, now banking IT projects. Uh, can you please explain now? IT projects means when you are accepting new IT projects, you have to drop some current projects, or is that yes? Okay, okay. So when you are calculating or when you are giving a value for your newly accepted IT projects, definitely you need to add the amount you were generating, the revenue you were generating from the existing dropped IT projects, not the revenue, actually the contribution. The contribution, that amount should be added. That is very important. Otherwise, you're going to lose. Ultimately, you will going to have losses if you are not considering this opportunity cost. So very important when taking pricing decisions. And if I say now the problem arose because our machines were working at their full capacity. It says clearly these machines are working at the full capacity. What if our machines were not working at their full capacity? Do we have an opportunity cost? Let's say let's say our machines were not working at the full capacity. There were machines, we had capacity actually. So do we have opportunity cost there? What do you think? So when we are deciding to uh, accept the new order, are we losing anything? Are we sacrificing anything? No, we are not sacrificing anything if our machines Since there's no any new order. No, I'm asking, now in this situation, our machines are working at the full capacity. No, our machines are fully packed. Machines are fully packed. So at that time, we are accepting the new order. Let's say our machines had the sufficient capacity remaining. That means machines were not working at their full capacity. We had already remaining unused capacity of our machines. At that time, if we are accepting the new order, 750 units, do we have to reduce our current production if we have sufficient capacity? No, we don't have. We don't have to. We don't have to reduce our current production because we have sufficient remaining capacity to accommodate the new order. In that case, do we have to calculate the opportunity cost? No, nothing, because we are not. Exactly, no opportunity cost. Very good. So I hope that is clear. So take these, even though these are very small examples, I just took some very small examples to explain the concept. But when you are applying these in the real world scenario, maybe these are very complex. But since you are good with the concepts now, fundamentals, you can identify, okay, that is the opportunity cost. We don't have an opportunity cost, or we have to have an opportunity cost. Do we have to consider that value and everything? So remember, those are important. Okay, right. The last one, incremental cost. Incremental cost is also like very simple. Incremental cost or revenues are the difference between cost or revenues and each alternative being considered. That means we have option 1 and option 2. Let's say if we are selecting option 1 over option 2, what is the incremental cost or what is the incremental revenue? Do this activity, then you will understand. The last activity for this part 2. Following are the costs and revenues of machine A and machine B, right? Machine A and machine B. Revenue from machine A would be 5,000 and revenue from machine B 3,000. Operating cost, machine A 3,000, machine B only 2,000. They have calculated the profit as well. Now my question is, what is the incremental cost and revenue if machine A is selected over machine B? First of all, tell me, what is the incremental cost if we are selecting machine A over machine B? Incremental cost. What is the increase in the cost if we are selecting machine A over machine B? Machine B cost is 2,000, machine A cost is 3,000. So the incremental cost would be 1,000 rupees. 1,000 rupees. What is the incremental revenue? What is the incremental revenue if we are selecting machine A over B? 2,000 rupees. From 3,000 to 5,000 incremental revenue. Let's say we are selecting machine B. Selecting machine B. What is the incremental cost? What is the incremental cost of selecting machine B over machine A? Machine A 3,000, machine B 2,000. What is the incremental cost? It is minus 1,000, isn't it? It is not an increase. It is a minus 1,000. What is that? Basically, it is a cost saving. It is a cost saving. We can't say zero. We have to say minus 1,000 because we have a saving. We have to indicate that there's a cost saving when we are purchasing machine B over machine A. Correct. Yes. So it is a cost saving. What about incremental revenue? Incremental revenue? It is minus 2,000, isn't it? It is minus 2,000. That means a reduction of revenue. A reduction of revenue. Likewise, you will have to consider, these are very small concepts, simple concepts. You will have to consider when you have two alternatives, what is the incremental cost and everything. And especially when we are doing project appraisal analysis, when we are calculating net present value, IRR, internal rate of return and everything, when those calculations are done, if you have done those calculations, if not, just forget about it. If you have done these calculations, when you take the cash flows to those calculations, you always take the incremental cost. Incremental cost. There are some points there, right? So just to remember, if you don't know, or if you are not familiar with those projected prices, just forget about it. I don't have time to explain that part. But remember, incremental revenues are uh, used when you are calculating those NPVs, IRRs. Okay, right. So that is the last concept, last cost type, incremental cost and incremental revenue. Yes. Last two questions. Do you include the fixed cost into incremental cost? What do you think? Now, incremental cost is when you have two options. What is the cost increase now? Do you include fixed cost also to the incremental cost? Machine A, machine B, fixed cost. Fixed cost for machine A is 10,000. Fixed cost for machine B is 12,000. What do you think? Do we can we have incremental cost in this scenario? Fixed cost for machine A is 10,000, whereas fixed cost for machine B is 12,000. So do we include fixed cost as incremental cost? Yes, if there's an increase in the fixed cost compared with when we are comparing two alternatives, you have to consider, even though it is fixed, that doesn't mean that fixed cost is not different from all alternatives, right? So it says, do you include the fixed cost into incremental cost? Yes, we see if the fixed cost is changed under different options being considered, yes. Otherwise, no. So additional fixed cost is an incremental cost always. Remember, even though we learn fixed cost as constant and everything, but if it is different from two alternatives, if it is different for both alternatives, the change would be incremental. What is the main difference between incremental cost and marginal cost? What do you think? Now you know what is incremental cost. When you have two alternatives, if you pick one alternative, what is the increase in the cost? It can be plus, so it can be minus. Doesn't matter. What is the increase in the cost? What is the difference between this incremental cost concept and marginal cost? Incremental cost, you know. Incremental cost means when you have two options, what is the increase? Marginal cost. What do you mean by marginal cost? Marginal cost. Now, when we take marginal cost, it's about 1 unit. So see, incremental cost, difference of cost of two alternatives. Marginal cost means the cost of additional 1 unit produced. It's all about 1 unit. When you are increasing the production by 1 unit, what is the increase in the cost? That is marginal cost. But incremental cost doesn't mean 1 unit. When you have two alternatives, what is the change? What is the increase? Right? Okay, I hope that is clear. Always remember, marginal cost is 1 unit. Cost of additional 1 unit produced. Right. With that, we are ending part 2 finally. And then shall we have a small break for 10 minutes, I would say? And then we'll continue. 10 minutes means we'll start the session again at 10:35. One thing, I have shared the Excel spreadsheet in the WhatsApp group for the calculations. Please keep that sheet with you. And if you are joining in a laptop or a computer, that would be great. If you are using a mobile phone, you can do it later with the recording. But I just want you to do the calculations with me. That's the purpose. Ah, I think Prabhat, there's a WhatsApp group. I don't know. Others are there, I think. But I will share the spreadsheet here. Yeah, it's good, no? So I'm sharing the spreadsheet in the chat box now. Right. Others, like, how did you join the WhatsApp group? I actually don't know. I was added originally. That All right. Hi, everyone. Are you all there? Okay, right. Okay, thanks. So we are starting session 3, that is about cost assignment basically. And today we have a guest lecture as well for 30 minutes. I think you had a very good guest lecture last week. Do you find it very fruitful? Is that good? Yes. So today also we have one, and so that Professor Abhay Singha from University of Colombo, he will be joining us at 11:45 because he had a morning lecture. So that's why I dragged the session. But we see now I want to complete the session before he does the industry expert part. So we'll see how it goes. So cost assignment basically, I will give you a brief understanding what is cost assignment. This one. Now, in a nutshell, if you take direct material, direct labor, direct other cost, all these are direct cost as we have discussed, direct and indirect. Can we directly or can we easily identify these direct cost to a cost object or not? Yes or no? Can we directly or can we easily identify these cost to cost objects or not? Yes, right. It's true. We can easily identify these direct material, labor, other cost to cost objects. So that's why it says easily traceable to the cost objects. Remember the word traceable. When we can directly identify any cost to a cost object, we use the word tracing, traceable, easily traceable to cost objects. But what about indirect manufacturing cost? Now, direct costs are obviously we can, but when it comes to indirect manufacturing costs like indirect materials, salaries paid to factory cleaning staff, factory electricity bill, factory rent, all these are manufacturing, indirect manufacturing cost. That means manufacturing overheads. Can we easily identify these costs to cost objects? No, right? We can't easily identify these cost to cost objects. So that's why, since it is not possible to directly trace these cost to cost objects, companies need to assign these cost to cost objects using various cost assignment methods. So that's why we need to assign these cost to a cost object. Basically, if we take a product, we can identify direct material, labor, direct other cost. That means direct material, we can say 20 rupees per unit. Direct labor, we can say 20 rupees per unit. But then we take factory rent, factory electricity bill, salaries paid to cleaning staff, all these manufacturing overheads, we can't identify to a product. So that's why companies have to assign these costs to cost objects, right? So that is the lesson. When assigning indirect manufacturing costs to cost objects, let's say I have, let me again take an Excel sheet. Let's say my factory rent of of this month is 25,000, and then salary, factory electricity. I will take easy examples. Factory electricity would be 15,000. So what is the total manufacturing overhead cost? Total manufacturing overhead would be 40,000 rupees. Now let's say I have two products in my company, product A and product B. Product A and product B. Don't mind the background sound. It's like background music now. Product A and product B. Now here I have 2,000 units produced for product A and 1,000 units produced for product B. Now, can we take the total 40,000 manufacturing overhead and then take the total units manufactured during the period as 3,000? And can we divide 40,000 divided by 3,000 the amount is 13 rupees and 33 cents. We'll take 13 as one number, 13 rupees per unit. Likewise, can we actually assign manufacturing overheads to these units? Is it rational? Is it logical? Is it practical? If that is the case, we don't have to do this lesson, isn't it? We don't have to learn how to assign cost and everything. If we can take the total manufacturing overhead and then get the quantity and then divide the total cost by the total quantity, that's not the case. So there are so many complexities in real world. Yes, practical easy, very easy, but it's not correct. It is not correct. So that's why it says, when assigning indirect manufacturing cost to cost objects, it would be unrealistic to divide the total direct cost by number of units produced, since cost objects might have used different cost elements. Now, let's say sometimes, if I just add one more example for this list, quality inspection cost. $50,000. Okay, I have one factory rent, quality inspection cost. Now, quality inspection cost is also, we can't directly identify to a cost object, isn't it? That is overhead, indirect. So 90,000 becomes, no, cost becomes 90,000 with this 50,000 also. Now, if we take 90,000 divided by 3,000, cost is 30 rupees per unit. 30 rupees per unit. Now the problem is, my product A doesn't go through a quality inspection. My product B does go through quality inspection. If that is the case, now I think that is more logical. If this is the case, is it good or is it correct to divide quality inspection cost also to product B? Now, in this way, we have taken the total cost, we have taken the total quantity, and then divided and taken one cost, 30 rupees per unit. So, if I assign the manufacturing overheads to product A, 30 rupees, and there are 2,000 units. Product B, 30 rupees, and then we have 1,000 units. Total cost, manufacturing overhead becomes 90,000. Is this correct now? Now I'm saying product A doesn't go through quality inspection. Only product B needs quality inspection. So is it correct to assign this 50,000 rupees for product A? Is it correct? It is not. It is not. It is wrong, because the consumption of cost consumption is different from product to product. Maybe the number of hours they use, maybe the service they get from different departments. Different things are there for different products. So if we just take the total and divide by the total, that is incorrect. That is not logical. So that is why we have to have a logical method to assign manufacturing overhead cost to products. Right. So just to begin with, direct cost, as I told you earlier, can be accurately traced to cost objects. We use the term cost tracing. And indirect cost, that means the overheads, basically manufacturing overhead cost, we use the term cost allocation. We have to allocate. We have to intentionally allocate the cost, right? So cost allocation is the process of assigning cost when direct measure does not exist. So directly we can't identify. So we calculate a rate, we assign or we allocate the cost based on different methods. And then the basis for allocating cost to cost objects is called an allocation base. You will understand this. When we are allocating manufacturing overheads to cost objects, we have to have an allocation base, or you call it cost driver. We need to have a base. You will learn this. Right. Activity 1. Quickly do this activity and tell me the answers. Natura Private Limited produces varieties of cosmetics products for a local market. The following cost items are usually reported in the manufacturing records. Now, what are the costs we can directly trace and what are the costs we have to allocate? Remember, directly traceable means direct cost. Allocated means manufacturing overhead cost. What about natural extracts for cream production? Directly traceable law to be allocated. In other words, direct cost or indirect cost. Directly traceable. Directly traceable. Other raw materials for cream production? Other raw materials for cream production can be directly traced or to be allocated. That is actually, you can argue on this. Other raw materials, let's say you can't identify the quantities for this cream production, like one tub maybe. For one plastic tub, you can't identify the kilograms or the quantities for this other raw materials. If so, direct traceable law to be allocated. I mean, you can argue these things. These are very open. Yes, if you can't identify the quantity of raw materials per plastic tub of this cream cosmetic product, then you can, if you can. If you can't, it should be allocated. What about plastic tubs for cream packaging? Plastic tubs for cream packaging. Directly traceable or to be allocated? Directly traceable. You know, for one plastic tub, one cream, one cosmetic product, one plastic tub. So you can directly trace. Quality inspection cost. Quality inspection cost. Directly traceable or to be allocated? To be allocated. You can't directly trace. Wages for machine operators paid directly. Wages for machine operators paid directly. Can, because it clearly says that it is paid directly. So in that case, directly traceable. Wages for factory cleaners, directly traceable or to be allocated. Factory cleaners, we can't directly trace, to be allocated. Electricity cost of the factory, it is again to be allocated. Machine maintenance expenses, it is again to be allocated. Likewise, in the factory, in your production, if you are working related to a production setting, right, you have so many costs and you need to identify whether these are directly traceable or to be allocated, right? Okay. Right, I'm quickly moving. Right. Now we are talking about allocation. Now you have two systems, costing systems, direct costing system and absorption costing system. Direct costing system basically talks about how direct cost can be traceable to cost objects. That is very straightforward. That is easy. Direct material, labor and other. Absorption costing system means when you can't identify the cost to cost objects, that means manufacturing overheads, how can we absorb, how can we allocate manufacturing overheads to cost objects? As you can see, there are two methods you can use. Traditional absorption costing system and the activity-based costing system. Traditional and activity-based costing system. Now, if you have done your A-levels, I don't know, if you have done your advanced level in commerce stream, this is something we cover, traditional absorption costing system. If so, if not, when you are doing CMA, obviously there are so many CMA members. I was talking about the basic level. You have covered traditional absorption costing. If you are not, don't worry, I'll be touching on that aspect as well because we have to cover everything. But activity-based costing is the new method, traditional and activity-based costing. So the two types of cost assignment systems, direct costing and a traditional absorption costing system, these are the things, right? Traditional and activity-based costing. This one I explained in the morning as well. You need to remember this classification again when you are doing this. Direct, indirect manufacturing and non-manufacturing, how the classification goes. I just put this slide to refresh your memory, but luckily we discussed this in the morning as well. Right. So, as I told you, assigning direct cost to cost objects, it's very direct. It's very straightforward. Nothing to worry. You can easily identify. But assigning indirect cost to cost objects is the uh, difficult part, and there are two approaches, traditional and activity-based costing. So I'm first discussing the traditional absorption costing system, how we can use this traditional method and do it. Now, even though I say traditional method, this method is also used by most of the organizations, especially small and medium organizations, medium-sized organizations. They are still using this method. That's why I thought of covering this aspect as well. Right. Traditional costing system. Now, when it comes to traditional absorption costing system, we have one method. We have one way of doing it, that is blanket overhead rate or plant-wide overhead rate. Blanket or plant-wide overhead rate. That is, first of all, to understand or to identify this, you need to be familiar with this formula. What is this formula? Overhead absorption rate. You call it OAR. When you are allocating, when you are assigning manufacturing overhead cost to cost objects, first of all, you need to have a ratio. First of all, you need to have a ratio. To calculate that ratio, that means OAR, you need to use this formula. What is that formula? Budgeted overhead divided by budgeted allocation base. So you need to familiar with this OAR first, because that will be used in all these questions. So what happens is, in an organization, when let's say I'm planning my organization's production and all the cost and everything for 2026. I'm planning for 2026. And now when I plan my production, my scheduling and everything for 2026, I need to have a basic understanding. I need to have a basic understanding of my product cost. Basic understanding of my product cost. What are the components? Direct material, direct labor, direct other if available, and then manufacturing overhead. Direct material, labor, and other, it's easy, as we discussed, we can identify these cost to cost objects very clearly. So per unit, with the market information and with the past experience I have, I can guess the values, let's say 200 rupees, 50 rupees, 20 rupees, likewise. But manufacturing overhead cost, you can't just guess a value like this. You can't just guess. You have to do a calculation and get an estimation here, right? Still, we are talking about, like, we are planning. We have not done the production. We are planning. So at the planning stage, we don't know the manufacturing overhead cost per unit, because there are so many elements coming under manufacturing overhead. So what are the things? You have to consider factory rent, you have to consider factory electricity, you have to consider factory water, internet, cleaning staff salaries, everything, supervisor salaries, so many components are there. So you have to consider everything. When you have so many line items like this, you have to guess the prices, you have to guess the values for each and every line item, maybe with your experience or with the market rates. Factory rent, let's say you have a rent agreement, you know that 100,000 would be your factory rent for the next couple of months, next couple of years. So you are putting 100,000 there. Factory electricity, you can guess, okay, last month and the month before, the cost was 20,000 per month. So if that is the case for 2026, 20,000 multiplied by 12 and some additions, I can guess like 240, I will put it as 300,000 with the inflation adjusted. Likewise, you have to guess. You had to guess the values for each and every manufacturing overhead cost, right? So what I want to highlight is, are these costs actual or budgeted? Are these costs actual or budgeted? 100,000, 300,000, these are actual costs or these are budgeted costs? Exactly. These are estimated or these are actual or budgeted. I'm talking about 2026. 2026. Budgeted or actual? Have we actually spent these amounts or we are thinking, we are budgeting? Yes, exactly, budgeted. These are estimated and budgeted cost. So I'm taking like this. Let's say I have these amounts. I'm taking the total budgeted manufacturing overhead cost. I'm budgeting. And then I can have so many allocation bases. That means, how do we allocate, how do we assign these manufacturing overhead costs to products? How can we assign these manufacturing overhead costs to products? There can be so many allocation bases. Traditionally, organizations use allocation bases like machine hours, labor hours. Likewise, traditionally, organizations use these allocation bases. There are so many other allocation bases as well, but I'm taking these two as the examples. Yes, there are so many allocation bases. So, how can we calculate overhead absorption rate? How can we calculate overhead absorption rate? OAR, budgeted overhead cost divided by budgeted allocation base. Budgeted overhead cost divided by budgeted allocation base. How much is the budgeted overhead cost? Now I have budgeted my overhead cost as 500,000. Then I have to have a budgeted allocation base as well. Let's say with the past experience, with the new plans for 2026, I budget my total machine hours for the factory would be 50,000 machine hours. So that is not something we can just think. We have to have our past information. Let's say last year we used 45,000 machine hours in total. So in that case, I estimate next year's total machine hours requirement as 50,000. There will be 50,000 machine hours. So in that case, I budgeted allocation base as 50,000 hours. So this is in hours. Now, when I have all these two amounts, 500,000 and 50,000, budgeted overhead cost and budgeted allocation base, now I can calculate my OAR, overhead absorption rate. What is the rate I'm going to use when allocating the manufacturing overhead cost to our products? 500,000 divided by 50,000, 10 rupees. How can we write this correctly? Rupees 10 per what? 10 rupees per what? 10 rupees per unit or hour? 10 rupees per machine hour or 10 rupees per unit? I divided 500,000 by 50,000 machine hours. In that case, 10 rupees means 10 rupees per machine hour. Machine hour. So I have that one. I have calculated. So it's a process. How did we calculate? I budgeted all the line items in the manufacturing overheads. I took the total 500,000 and I selected one allocation base, machine hours. I estimated the total machine hours requirement for the next year, 50,000. And then I used that in the formula and I got the answer 10 rupees per machine hour. This is my overhead absorption rate. This is my overhead absorption rate. Now tell me, if my product, let's say if my product, direct material cost, direct labor cost, direct other costs are there, I know to manufacture 1 unit, I need 3 machine hours. To manufacture 1 unit, I need 3 machine hours. What is the what is the allocated manufacturing overhead cost? What is the allocated manufacturing overhead cost? My one hour is 10 rupees. In my company, my OAR is 10 rupees per hour. Are you all clear? For 1 machine hour, I need to spend 10 rupees. So I allocate 1 machine hour, 10 rupees. So if my product needs 3 machine hours, what is the cost? 10 multiplied by 3 hours, 30. This is how I assign the cost. This is how I assign the cost. Then what is the total production cost per unit? Production cost per unit, 30 rupees, 300 rupees, 300 rupees. Are you clear? So this is what we need to do before the manufacturing. This is not something we do after manufacturing. Before manufacturing, we calculate OARs. Organizations do have OARs calculated before the production, before the manufacturing process, and then we calculate the total cost, 300. Are you all clear? The process. I just explained you the basic process we are going to follow in this absorption costing method. Any doubts? Right. Hope you are clear. If not, you can ask, right? So this is what we did. Now my question. When calculating overhead absorption rate, OAR, do we rely on actual numbers or budgeted numbers? When calculating OAR, we rely on actual numbers or budgeted numbers? Budgeted numbers. Remember, always in your exam, in your organization also, OAR should be based on budgeted numbers. Budgeted numbers, right? Okay. So that is the explanation. I can give you overall explanation. Now I'm explaining this blanket overhead rate or the plant-wide rate. Now you have some kind of idea about the OAR, overhead absorption rate. Blanket means this is most simplistic traditional costing system assigns indirect cost overhead to cost objects using a single overhead rate for the organization as a whole. Now tell me, in this example I took, in my example, do we have multiple OARs or one single OAR? Multiple OARs or one single OAR in this situation? I have only one OAR. For the whole organization, I have only one OAR, overhead absorption rate. Let's say I have another product B, a different product called product B. For that also, I will use the same OAR and assign the cost. Such OARs, if the whole organization has only one overhead absorption rate, we call it blanket OAR. Sorry, blanket OAR. Or else you say plant-wide OAR. Plant-wide OAR. So blanket or plant-wide OAR means for the whole organization, you calculate only one OAR, right? So that is the concept. Actually, we did one blanket OAR as the example. Right. Activity 2. I want you to answer this activity 2. Now, there are no sheets. there are no there's no tab available for activity or this activity. If I'm correct. Yes, there's no sheet, there's no tab in your sheet. You can do your own calculation. Activity 2, it starts from activity 3 actually. Activity 2. I want you to calculate the plant-wide overhead absorption rate for this organization. Read it and do. So if I read the question, total manufacturing overheads for the manufacturing plant of Orchid PLC are estimated as 9 million rupees. That means manufacturing overhead. See, it is estimated. It is not actual. Estimated, budgeted 9 million rupees. And the company has selected direct labor hours. Company has selected direct labor hours as the allocation base. So allocation base is also given for assigning overheads to products. Total number of direct labor hours estimated to 600,000 for the period. And the total manufacturing overheads and direct labor hours can be analyzed as follows. They have 3 departments, department A, B, and C. For each and every department, they have segregated or analyzed the overhead and direct labor hours one by one and given. So it says the total estimated budget, manufacturing overhead cost as 9 million rupees, and it's 2 million, 6 million, and 1 million. Total direct labor hours 600,000. It is 200,000, 200,000, and 200,000. It is the same. One of the company's product is product Z, which requires 20 direct labor hours in department C, but does not pass through departments A and B. Right. Don't worry about the last sentence. Calculate the plant-wide overhead rate. Plant-wide overhead rate. What's the formula? Budgeted overhead divided by budgeted allocation base. That's the formula. So in that case, if that is the formula, how much is the total budgeted overhead? How much is the total budgeted overhead of this company? Total budgeted overhead. Is that difficult? 9 million, isn't it? 9 million rupees total budgeted overhead. So I'm writing 9 million. What is the budgeted allocation base? First of all, tell me what is the selected allocation base for this company? Direct labor hours, isn't it? Direct labor hours they have used, direct labor hours. So what is the budgeted total direct labor hours? They have estimated to 600,000 hours, isn't it? Total 600,000 hours. So I'm writing 600,000 hours. So in that case, 9 million divided by 600,000, am I correct? Is it 15 or another price? Can you please check? 15 rupees. So I'm writing 15 rupees per what? Remember, when we are giving overhead absorption rate, definitely we have to say 15 rupees per watt. We don't know whether it is per unit or per machine hour or per labor hour. So per direct labor hour. Likewise, we have to write. Are you all clear with 15? Do you have different answers or are you okay? There can be some small mistakes when you are calculating. Do you all agree with 15? Yes, 15, right? 15, correct. Thanks. Okay, so that is your plant-wide overhead absorption rate. You don't have any other rates. For the whole organization, you take the total overhead cost, you take the total direct labor hours, and then you have only one single overhead absorption rate, that is 15 rupees. Now tell me, if that is the case, it says one of the company's product is product Z, which requires 20 direct labor hours in department C. They have departments as well, no? What is the assigned cost? What is the cost we can assign to this product Z? Manufacturing overhead cost assigned to product Z. What do you think? Product Z assigned manufacturing overhead cost. How much is that? Now, how many direct labor hours this product needs? 20 direct labor hours. But it says from department C. When we have plant-wide overhead absorption rate, do we worry about the departments? We are not. We do not worry about the departments. Whichever the department, we don't care. We have only one OAR. So our OAR is 15 rupees per direct labor hour. So if the product needs 20 direct labor hours, that multiplied by 20 multiplied by 15, assigned cost is 300. I think previously I got this 300 as the assigned cost. In the chat, I saw 300. Yes. So 300 rupees would be the assigned manufacturing overhead cost as per blanket overhead rate, plant-wide overhead rate. Right. Now, calculate if departmental overhead rates based on direct labor hours are used. Now, let's say there are 3 departments. If these 3 departments have 3 separate overhead absorption rates, what do you think about these overhead absorption rates? What are the rates? Can I have the answers? Department A, Department B, and Department C. They have separate overhead absorption rates. So we take the relevant overhead cost for Department A, 2 million for Department A, and then 200,000 hours allocated for Department A out of 600. 200 would be for Department A. So I write 200,000 there. How can we take the cost? 2 million divided by 200,000, 10 rupees. 10 rupees per direct labor hour. Likewise, for Department B allocated or assigned overhead cost, total overhead cost is 6 million. 6 million divided by 200,000. 30 rupees per direct labor hour. When it comes to Department C cost is 1 million divided by 200,000. 1 million divided by 200,000. So in that case, the cost is 5 rupees. 5 rupees per direct labor hour. Check whether your answers are correct. 10, 30 and 5. Right? Yes, I hope so. 30 rupees and 10 rupees and 30 rupees and 5 rupees per direct labor hour. So this is like not plant-wide. You have department-wise overhead absorption rate. What do you think the most accurate method? Having a plant-wide method, plant-wide rate or department-wise rates? What is more accurate? Exactly, department-wise, right? Having a plant-wide or a blanket rate would be the lazy method, I would say. That doesn't capture, yes, that doesn't capture the differences and all. But Having departments, it's more logical. Department-wise OARs are more logical. Right, now calculate the product is at cost. Now product is at needs 20 hours from which department? Previously, we didn't care about the department, no. Now we have to think about the department. 20 direct labor hours from department C. Department C. So, department C, what is the OAR? Department C OAR is 5 rupees. 5. So, in that case, 20 multiplied by 5, 100 rupees. 100 rupees for the product is it. Previously, when we were assigning, the cost was 300, but when we actually calculate the department-wise rates and calculate the assigned manufacturing cost, it is only 100 rupees. Manufacturing overhead cost, only 100 rupees. There are differences. So that is why we say always department-wide absorption rates are better. Right? So that is the answer. I hope you are clear. This one. All right. Now the two-stage allocation process. Now I'm going quickly. The thing is, when we have now, even though we calculated department-wide rates or blanket rates, the total manufacturing overhead cost was calculated and given. 9 million was calculated and given in the question. But in actual reality, actually, we have to think about these individual cost items and calculate this total overhead cost as well, even though this was given in this activity too. So when you have to analyze the cost, when you have to calculate the total overhead cost, you have a certain process, right? I will show you the process. There's a 4-step process. Step 1, assigning all overheads to production and service cost centers, service departments. Reallocating the cost assigned to service cost centers to production cost centers. Computing separate overhead rates for each production cost center, and finally assigning cost center overheads to products or other chosen cost objects. It's like this. Now, in any manufacturing company, in any factory, there are two types of departments. Production departments and service departments. Production and service departments. Production departments directly involved with the production. In these departments, we carry out our production. Let's say in a garment manufacturing company, cutting division, cutting department, sewing department, packing department. Products are manufactured in these departments. But if we take service departments, we are not manufacturing, we are not conducting the manufacturing process in the service department. We are providing different services to other production departments. Let's say machine maintenance department, machine maintenance. Now, if there's a machine breakdown in one production department, this machine maintenance department will provide services to that. So, two types, production and service departments. So, first of all, you need to identify what are the departments you have. How many production departments, how many service departments. What we do is, now I'm going to your Excel. That's easy for me. Like this. I'm referring to activity in the calculation sheet, activity 3 working sheet. Activity 3, right? In this activity 3, see, there are production departments and service departments. What are the production departments in this company? Machine Center 1 and Machine Center 2. In these departments, the production is carried out. And then one service department, they have factory maintenance. So this is a very common department. That department will provide services to other production departments. What we do is, first of all, we need to identify our manufacturing overhead cost to these three departments. When we have, let's say, factory electricity, that is one manufacturing overhead. We write the total. Okay, factory electricity total cost would be 200,000. 200,000. But how can we assign this 200,000 to these departments? First of all, we have to assign these costs to departments. That is the first step. How can we assign? What do you think? What are the methods we can use to assign these 200,000 to these departments? We need to have a logical base for that. We need to have a logical base. If I mention like this, now, when we have these production, three departments in the factory, this is machine center 1. This is machine center 1. This is machine center 2. This is factory maintenance. Factory maintenance. When we take the square roots, like square meters, square feet, the floor size would be, this is 1,000, this is 400, this is 300. What do you think? Which department should bear the highest electricity cost? Based on the floor area, based on the square feet. Which department should bear the highest electricity cost if this is the floor area? Exactly, the machine center 2. Machine center 2 is having a big floor area. When it comes to square feet, 1,000 square feet compared to machine center 1 and factory maintenance department. This is the largest one. Then electricity cost, highest electricity cost should be paired by machine center 2. So in that case, it is a logical base. It is a logical base. What is our base? Floor area. Floor area. How can we divide the cost now? What is the total square meters? Total square meters, square feet in total? 400, 1,000 and 300. 1,700. What is the total electricity cost? 200,000. If I divide 200,000 by 1,700 total square feet, what is this 118? What is the meaning of this 118? How can we interpret this? Rupees 118 per what? Per what? Per square feet. Per square feet. Correct. So, per square feet, 118. So, how can we assign the electricity cost for machine center 1? How can we assign the electricity cost for machine center 1? What is the formula we can use? How many square feet we have? 400 in machine center 1 multiplied by, what is the rate? 118. 47,200. Machine center 2, how many square feet we have? 1,000 square feet. Multiplied by, what is the rate? 118. 118,000. What about factory maintenance? What is the square feet? 300. 300 square feet in the factory maintenance department. What is the rate? 180. 35,400. What is the total of this electricity cost? It is 200,000. Yes, it's coming as 200,600 because because of this decimals issue, okay? Because it is 117.65, no? Right. So in that case, if you take like this, you can assign the cost first of all to departments. I hope that step is clear. You assign with a logical base to departments first. Are you all clear with that one? Likewise, you assign all these costs. There can be different costs: factory electricity, water, factory maintenance, all these costs to departments. After allocating cost, let me go back to the slides. So assigning all overheads to production and service cost centers, step 1 done. Second one, reallocating the cost assigned to service cost centers to production cost centers. That means basically when we are proceeding with the overhead absorption rates, we can't keep cost in the service department cell. We can't keep cost even though we initially assign the cost to 3 departments like this. We can't keep cost in the service department. Why? We are not conducting any manufacturing process in the service department. In that case, we have to, at the end of the question, like means after completing all these rows, likewise I'll show you. This is an example. See, likewise I have written all these overhead cost. I have written the basis, I have written the total, and I have assigned with a logical base. Here there are 3 production departments, and then we have 2 service departments. See, 2 service departments. What I have done is, after listing out all these manufacturing overheads, I have taken the total. I have taken the total. See, I have taken the total. The next step, this is our first step. The next step is what I said, we can't keep the manufacturing overhead cost in the service departments. The total material procurement cost is 770,000. Total general factory support cost is 459,000. But we can't keep the cost there because we are not conducting any manufacturing process here. What we have to do is, we have to reallocate this service department cost to production departments. We have to reallocate. When we reallocate also, now in a question, it will give you the basis. How are we going to reallocate the cost? But in the actual production setting, based on different arguments, by selecting the most appropriate base, you can reallocate the cost to production department. See, 770 we are removing here, and then we are adding to 3 production departments. Here we have a base, material procurement service cost 770,000. We are reallocating based on material issues. Material issues, how this material procurement department has issued materials to these 3 production departments. That is a logical base. Using that base, you are reallocating the cost to production departments. General factory support also, how these production departments have obtained the general factory support service. Based on that argument, you are reallocating the cost. So see, 770,000, you removed it from here and then added to production departments. Likewise, general factory support also, you are adding them again. Likewise, you are having the total. So I'm taking the total like this, right? That is the step 2, reallocating the cost to production centers. Third step is computing separate overhead rates for each production cost center. That means after finalizing everything, that means after getting all these costs to production departments, you calculate the overhead absorption rate. How can we calculate the overhead absorption rate? Now we know for machine center X, what is the total budgeted overhead cost? 2.14 million, 2.14 million. See, 2.14 million. And then what is next? You need to identify a suitable allocation base, because overhead absorption rate, you need to have allocation base. In this question, we have used machine hours. So in your organization also, it's not easy. You will have to find what is the allocation base. Basically, when you have a machine center, that means you have so many machines working in this department. Most of these costs are driven by the machine hours. If you are using so many machine hours, if you are working so many hours, cost will increase. If you are working less number of machine hours, cost will decrease. With that assumption, you are using machine hours, maybe labor hours. If you are having more laborers in your department, labor hours. If you are having more machines in your department, machine hours. Likewise, you are using a correct or suitable allocation base. And then after getting that, you get the OAR, overhead absorption rate. See, from this point onwards, I think you are clear because previously also for three separate departments, we calculated three separate overhead absorption rates. Now we can calculate the cost of products. Let's say, I'm just showing you the process using this example. Let's take product A. We have a product called product A. Product A product A that product A uses 5 hours from machine center X. Let's assume from this machine center X, product A gets 5 machine hours. How can we take the cost then? 5 machine hours into this 10 rupees OAR, that is 53.5. 53.5. Same product A gets from machine center Y, that is the second department. When we are manufacturing product A, we get 10 machine hours service from the production department, machine center Y, from this department. What is the overhead absorption rate? 14. So 14 multiplied by 10 hours, 148. When we are manufacturing product A, we get 10 hours from the assembly center. So assembly center is the next department. What is the rate? 6 rupees per direct labor hour. How many labor hours we need? 10 labor hours. 10 multiplied by 6, 60. Likewise, you can assign the cost. So what are the steps? First of all, you need to identify what are the departments available in your company. And then for each and every overhead cost, we identify a base and we identify the cost to these departments first. So first of all, we assign the cost to departments. And then if you have service departments, you need to reallocate them to production departments. Likewise, you calculate the total manufacturing overhead cost for 3 departments. And then you calculate the overhead absorption rates for each and every department. And based on the usage of the service of these departments, you allocate the cost to products. This is the 4-step process in traditional absorption costing system. Are you clear? Do you have any doubts? Thank you. Right. Okay, so with that, shall we quickly do this activity 3? Shall we quickly do this activity 3? You have all the information given in the activity sheet. This is the activity sheet you have. See? So the question says, the estimated overhead cost for the Omega PLC, which has 2 production centers, Machine Center 1 and Machine Center 2, and 1 service center factory maintenance are as follows. So altogether, how many departments? 3 departments, 2 production and 1 service. And then the cost is given. Indirect wages and supervision. See, indirect wages and supervision, they have given us the cost by after dividing the cost between these 3 departments itself. That's easy for us, right? We don't have to allocate the cost again to departments. They have given the cost for each and every department. Machine Center 1, Machine Center 2, factory maintenance. And then see indirect materials. Again, they have divided the cost in between these departments and we have been given the cost 600 and 700,000. Look at the third one, insurance of building. That one, we don't have department-wise amounts. We have one bulk amount, 900,000. That means what? You need to allocate this 900,000 in between these three departments. Try to do that first. So all this information given in the Excel as well. So indirect wages, indirect materials, and then insurance of building. What are these information? Now you have been given a table for three departments, area occupied in square meters, right? So in square meters, for three departments, 2,000, 3,000 and 1,000. So we can analyze the floor area used by three departments. And direct labor hours used in two departments, machine center 1 and 2. Machine hours used in two departments, machine center 1 and 2. Remember, these are not past tense, even though I say used, these are budgeted. These are estimates. Based on past experience, based on predictions, these are estimates, right? Right, so with the, I have given that table as well, not in a table, but separately like this. Area occupied, direct labor hours, machine hours. Now this is your formula. Let me delete everything. Now, what do you call this formula? What do you call this format? Not a formula format. Overhead analysis sheet. You call this overhead analysis sheet, right? This sheet includes your overhead cost, your allocation base for that overhead cost, the total cost, and then for each and every department, you need to have separate columns. So we have two production departments, you have two columns, one service department, you have one column. Shall we write the first one? What is your first overhead? Indirect wages and supervision. So I'm writing indirect wages and supervision. Do you have to allocate the cost again between departments, or is it already given? 200, 300 and 100? It is already given, right? In that case, what is your base? Do you have to find another base or what? In a situation like this, we write the base as direct because it's already given. What is the total? Total is 600,000. 600,000. How can we allocate the cost? Just a matter of writing 200, 300 and 100. No need to divide or do anything. Like this. I'm going to the second one, indirect materials. Indirect materials. Like this. Again, the costs are given, already allocated. Cost base is direct. And then the total is tallying to 1.3 million. For machine center 1, we have a cost 600,000. For machine center 2, we have 700,000. Like this. And then we have insurance of buildings. How can we allocate the insurance of buildings based on the information given in this question? What do you think? I need your ideas. How can we allocate the insurance? Exactly. Building insurance. So building insurance, we can, with the information we have, we can allocate this. What is the total? 900,000 cost based on floor area, area occupied. So I'm using area occupied as the base. And then how can we allocate the cost? How can we allocate the cost? It's a simple mathematical calculation. Now, if the total insurance cost is 900,000, right? If the total insurance cost is 900,000 and the total square meters tallying to 6,000, If we divide 900,000 by 6,000, 150. What do you mean by 150? Rupees 150 per square meter. For 1 square meter, 150 rupees. So how can we assign the cost? 150 multiplied by machine center 1, how many square meters? 2000. Machine center 2, 150 multiplied by how many square meters? 3000. For service department factory maintenance, 150 multiplied by 1000. Likewise, we assign the cost. See whether it's tallying to 900,000. Yes, it's tallying to 900,000. So we have taken all the overhead cost given, manufacturing overhead cost given. Now I can take the totals. I take the totals like this. Next, I told you we can't keep the service department cost under these columns. We have to reallocate the cost. How can we reallocate the cost? There's a small part in the second slide as well. See the first sentence of the second slide. The factory maintenance department has provided services to production departments equally. Now, what should be the case? How can we reallocate the cost? Reallocating service cost, factory maintenance. We have only one service cost center now. How can we reallocate this 250,000 in between machine center 1 and 2? The condition is given, factory maintenance department has provided services to machine center 1 and 2 equally. In that case, we can remove 250,000 from machine center department, that means factory maintenance department, and we can add or reallocate equally means 125,000 each. 125,000 to machine center 1 and machine center 2. Are you clear? We can reallocate like this. Shall we take the totals now? If we take the totals like this, see there's no cost coming under factory maintenance because we have reallocated fully to production departments. These are the budgeted manufacturing overhead cost. Are you clear? Right. What is the next step? So we allocated the cost in between the departments. We reallocated the service cost to production departments. Next step is calculation of overhead absorption rate. How can we calculate overhead absorption rate? The manufacturing process of product X requires 2 machine hours from machine center 1 and 1 machine hour from machine center 2. Direct cost per unit is 1000. We have been given this information. That means we have to calculate the cost of this product X, and when that product is manufactured, that takes 2 machine hours from machine center 1, 1 machine hour from machine center 2. So how can we calculate the overhead absorption rate? We have the budgeted numbers, budgeted overheads we have. What should be the allocation base as you think? Look at the name of the department as well. What should be the allocation base? The cost of these machine centers should be absorbed to products based on what? With the names and the information given in the question? What should be the base? Can we reallocate? Can we assign machine center department cost based on direct labor hours? Or do we have to assign machine center cost based on machine hours? What do you think? What do you think the most suitable allocation base? It's just a matter of finding the most suitable allocation base when we are assigning the cost. What should be the correct allocation base? Exactly. Machine hours, isn't it? Machine hours. We have to take machine hours to allocate the cost. So we have the manufacturing overhead cost divided by budgeted allocation base. So we have budgeted manufacturing overhead as 1.225, 1.575, and then budgeted allocation base. How many machine hours are there in machine center 1? How many machine hours are there in machine center 1? See the information given in the Excel itself. How many machine hours are there for machine center 1? 1,240. So I can take this amount directly. What about machine center 2? How many machine hours are there? 3,120. Are you clear taking these total machine hours for each department? And then I can just calculate the rate by dividing budgeted manufacturing overhead cost by the budgeted allocation base like this. Clear? So if I write it like this, how can we interpret this? Rupees, if I take 988 per what? Per machine hour. This rupees 505 per machine hour. This is what? This is the overhead absorption rate. This is the overhead absorption rate. How can we calculate the cost of this one? How can we calculate the cost of this product? Okay. 2 machine hours from machine center 1 and 1 machine hour from machine center 2. So that means 2 machine hours from machine center 1. That means 2 hours multiplied by 988. And then from machine center 2, we need only 1 machine hour. That means 1 multiplied by 505. This is how we assign the cost to the product based on the overhead absorption rate, traditional method. All right. Do you have any issues? I think our guest lecturer also has joined the session. Sir, are you there?
Natasha, miss.
Yes, okay. Thank you, sir. Give me a second, sir. Right. So, do you have any problems? Do you have any clarifications? How did we do this? Anyway, I'll be sharing the Excel sheet with you. I have already shared the Excel sheet, but I'll be sharing the answer as well. Yes. Service department. Now the question says service department cost. Now factory maintenance department, see the slide, has provided services to production departments equally. So this factory maintenance department has provided services to machine center 1 and machine center 2 equally. So that means 250,000 can be divided in between machine center 1 and 2 equally. 125, 125. Are you clear now? Yes, thanks. Good. All right. So that is about the traditional absorption costing method. We have one more lengthy question, but I will be not discussing that. But I will be sharing the answers with you. I have shared the question. See, your question, full question is in your Excel sheet. So with that, we will start the guest lecture session. That is very important to understand the industry applications actually. So give me a second. Right, so it is both an honor and a pleasure to welcome our guest speaker for today's session, Professor Chandrasiri Abesingha from the Department of Accounting, Faculty of Management and Finance, University of Colombo. So Professor Abhay Singha is a distinguished academic with a remarkable career in management accounting. He holds a PhD in management accounting from Manchester Business School, the University of Manchester, UK, and an MPhil in strategic management and MBA from University of in Slovenia. And yes, and then BSc in Business Administration Special from the University of Sri Jayawardhanapura. He has served in several key academic leadership roles in the University of Colombo, including Director of Postgraduate and Mid-Career Program and MBA Program Coordinator of the Faculty of Graduate Studies. Likewise, he has held several key positions in the university as well. With extensive expertise in activity-based costing and strategic cost management, Professor Abhay Singh has contributed immensely to both academia and professional practice. So we are truly privileged to have you with us today to share your insights. This is your second time joining us. Last time also you joined with us. So thank you for accepting our invitation, and I warmly welcome you to this session, sir. Over to you.
Okay, thank you very much, Natasha Miss, for the extensive introduction. Thank you very much. And I'm very happy to see that this program in place. Actually, because in my understanding, the cost, that management accounting has to start with costing. That means if there is no costing process, if you don't know cost of products, we can't think of management accounting. So if we can't think of management accounting, we can't think of controlling a business. Therefore, we call even management accounting information as controlling information. So we can't compete if we don't have a proper management accounting system to provide sufficient information and guidance. Therefore, the aim of management accounting is to provide information and guidance for better decisions, controlling decisions of an organization. So you must understand what I mean by controlling decisions. So I'm not going to explain because within the limited time. Then thank you very much, Natasha Miss. Then I'll start my session.
Yes, I will give you sharing. Can you share the screen, sir, if you want?
Let me
Yes.
check. Yes, I can.
Yes. Okay.
Okay. So I think I was observing Natasha Miss's session is very clear, very nicely arranged. Even I could see these slides yesterday. Therefore, I know you know very well what is absorption costing or the conventional or the traditional costing and how it is done. Let me have this. Yes. Right. Yes. How you can assign cost based on the traditional costing method. So you are in a course of assignment of cost. So cost assignment, you know now very well as to how we can assign organizational cost to products. Because in practice, what happens is that we are producing and we are incurring cost. So costs are incurred for various purposes and we are producing goods. Then at the end, all the cost should be borne by products. Each unit of product should carry a certain amount of cost. Then only organizations can recover the cost. So then, therefore, in assignment of cost, as you have already learned, some costs are very easily we can assign. We call them direct cost, and overhead, indirect costs are difficult to be assigned. So then that is the issue in costing products or in assigning cost to products. And so before starting, I must also say that at any point, if you feel any doubt, any If you feel any clarity needed, any clarification, further clarification, please don't hesitate. You can interrupt me at any point. Actually, today I'm going to share with you some, based on my experience, about activity-based costing, right? So the given time is half an hour. So I try to give you an idea about why we should think of ABC, and what kind of benefits, that's also part of why, what kind of benefits we can derive if we adopt ABC, right? But most important, most crucial problem is how can we bring ABC? That is very important. But within the today's session, I can't answer that question, but I am doing it practically. It can be done, but I can't discuss it here within this short period of time. But anyway, I'm going to help you to open your eyes towards ABC. First, you must feel ABC is needed. Then only we can think of how can we bring it as practitioners in the field. Right. Therefore, my whole session is structured on two questions. One is why ABC? Next is what benefits we can derive if we have ABC. Right. Straightforward, if we say why ABC is needed. As Natasha Miss explained, we can, with kind of a rational manner, rational base, we can assign cost based on absorption costing, right? Absorption costing, that is overhead. We said that there are two types of cost, direct and indirect. Then direct cost, no problem in assigning, like fabric cost of a shirt, we can simply assign. But electricity, like indirect cost, how can we assign electricity cost expenditure to a shirt? That's the question. So therefore, that's why costing issue is always on overheads, right? So then that's why to resolve this issue, we had been using absorption method since 1860s. Then that's why we call it traditional method. Still, for now, more than a year, more than a century, that practice is in place. But by 1980s, it was identified that this practice doesn't really support managerial control, managerial decisions. Then that's how ABC came into practice, right? By 1980s. Then why ABC is not supportive? I can say that absorption costing does not provide a fair cost estimate. That means the cost assignment is not fair. Cost assignment is not acceptable under ABC. Yes, we are doing cost calculation, cost assignment based on absorption costing, as Natasha explained. We are even considering service cost centers and production cost centers, and like that there are different techniques we are using, and somehow therefore we are calculating an overhead absorption rate, and based on the overhead absorption rate we determine how much of overhead should be charged to each unit. We do it, but there is a question. Before that, I must say, this point doesn't say that we should not use absorption costing, because if there is no other way, at least we have to have absorption costing. And in my experience, more than 95 places, even in Sri Lanka today, we can see absorption costing. I haven't seen so far areas where these other methods like absorption costing or even lean costing. Sorry, activity-based costing or lean costing. Only absorption costing everywhere we can see. Therefore, we must learn it. That's why we have to learn. Without learning, we can't say it is incorrect or correct or whatever, right? So that's why you are learning under this course thoroughly what is absorption costing. But now, as a step ahead, I would say that this absorption costing does not provide a reasonable estimate. It's unfair, right? Secondly, I will show you this absorption costing does not support managerial decisions, right? I think I can explain first before going ahead the second question, second point. I'll show you why it is unfair. But before that, I would say absorption costing does not support managerial improvement decisions, right? Managerial decisions. Say, for example, normally under absorption costing, it is based on overhead absorption rate. Right now, in Natasha's, as she explained in your exercise, it was some 900 amount, 900 some amount was the absorption rate. Based on that, she calculated per unit. That is how it is done. Therefore, say, for example, we can say variable overhead absorption rate is 287. Even you can say not only variable, we can say machine center 1 absorption rate is 900 rupees. Machine center 1 absorption rate is 900 rupees. Let's do that. Right? One overhead absorption rate is rupees 950 per machine hour. That's what I think you did a little while ago. Right? Okay. What does it say? So machine center 1 costs 950 rupees per each hour of work. Right? So then that means it includes electricity, water, depreciation, any transportation, any wages, salaries, and any allowances, everything it includes. Total per hour, 950. Right? Now, the organization is facing an issue of reducing cost. They want to bring down the cost, let's say, due to the competition in the market. Now, they want to bring down the cost by, let's say, 12 rupees. Overhead. How can we bring it? Right? Silent. It doesn't say anything because you don't know how to do it, because the 950,000 is a collection of different types of expenses. It's a total figure. So you don't know from where we can reduce this. You can't think of electricity, you can't think of salaries. That's why. So then it doesn't provide any support to the management to go for cost management options, right? If you want to improve efficiencies, you don't know where you have to touch on. That's why you are blind. Then probably as a result, you may go to reduce welfare expenses, resulting in protests within the organization. You may try to limit overtime. You may try to limit usage of electricity for non-manufacturing purposes. You may try to limit, you may try to cut down annual trip of the company because you want to bring down the overhead. But sometimes what happens is that problem is somewhere else. Your workers, staff may be doing very well, but since you don't know where is the problem, you will try to cut down their overtime, cut down their annual trip, cut down their welfare expenses, arousing unrest among them. These are the other repercussions. So that's why that's the problem of this absorption costing, even though it quantifies or it measures the amount, not measures actually, it identifies a certain amount of overhead to be assigned, then you don't know, in making an action, taking an action, you don't know what has to be done. So you may unfortunately sometimes touch on unnecessary areas and bring the business to further in trouble, right? So then that's a big issue in overhead. Okay, absorption. I think that is enough to show one blurred area of absorption costing. Now, second issue is it does not provide a reasonable cost estimate. Reasonable cost estimate, what is it? Cost. Can anyone say what do you mean by cost? If I can ask Mr. Saminda Pereira, Saminda, can you say? It doesn't matter, no problem, just to say, this is why you believe. It may be different from the way I do. It doesn't matter. If it is different, I will tell you my idea. Can Saminda say? Can Anushka say? Anushka Desanayaka. What do you mean by cost? Anyone? Can Koshila say? Can Manjula say? Okay, no problem. This is the problem of online teaching. Yes, I can say cost is the value of economic resources consumed for any objective. If it is products, the value of economic resources consumed to produce a unit of production, right? To produce the production, that is the cost. So then absorption costing does not consider resources consumed, but it considers resources available. If there are some resources available, it doesn't matter whether you consume or not, you are charged. That's the absorption costing. Let's see how it happens with an example. Right, this is an example, just some I'm using for some sessions. That's why I took it the same thing. So there is a, like you studied as machine center. So I am here using as a cutting department. There are different cutting departments, sewing department in a garment factory, or maybe some other, any other factory, different industry. Cutting department, right? Cutting department of a factory has 3 types of cutting facilities. You know, in a cutting department, different machines are there. Manual cutting. Manual cutting is a general type purpose work machine, and there may be a very low skilled worker. They are general purpose machine operator. Heat cutting. Heat cutting is a little bit advanced. It consumes huge amount of electricity, but requires some kind of advanced skilled worker. And chemical cutting also requires an advanced skilled worker and also uses some chemical to do the cutting process for some different purposes. But the chemical may be very expensive, even more than electricity for heating. Like therefore, within the cutting department, 3 facilities: manual cutting, heat cutting, and chemical cutting. All 3 functions can be performed, but they are different as far as resource consumption is concerned, right? So that's the difference. Then finally, all jobs are sent to the manual finishing department. They finish and transfers to the maybe collection department or wherever. Right. Now, overheads analysis of the cutting departments are as follows. Overheads. Manual cutting, if you assess the operator salary and any amount of electricity incurred, any amount of other expenditure like that, you allocate 170,000 rupees for manual cutting. For heat cutting, 450,000 rupees. For chemical cutting, 480,000 rupees. For manual finishing, 160,000 amount of rupees. They all are based on expenditure to be incurred for each of these functions. Therefore, the total is 1,260,000 for the cutting department. That is for the cutting department. Cutting department cost is 1,260,000 for the period. Then we look at our capacities. If we are going for manual cutting, we have 200 hours that can be used. Heat cutting can be done up to 150 hours. Chemical cutting, we can do for 120 hours. Manual finishing, we can do for 160 hours. These are the facilities. Therefore, altogether, we have, say, 630 hours of work. Therefore, we can say cutting department's total hours available is 630. Cutting department's total overhead for a period is 1,260,000. Therefore, as you just before, as you learned, we are calculating overhead absorption rate for the cutting department. We don't consider other details. Then we go to the total overhead divided by total number of hours, absorption base. Accordingly, you come to 2,000 rupees per hour. That we call absorption rate, overhead absorption rate. That indicates each hour costs 2,000 rupees. Now we are going to see some more details. This cutting department performs 3 jobs. Job A, Job B, Job C. 3 different types of jobs they perform. There are some jobs, they require 6 hours of manual cutting and 5 hours of manual finishing, and altogether 11 hours. Job B requires 1 hour of manual cutting, 2 hours of heat cutting, 3 hours of manual finishing, and altogether 6 hours because it is using more heating. Therefore, manual cutting doesn't take much time. Mainly, it takes heat cutting, 2 hours. And manual finishing also comes less. Therefore, 6 less than Job A. Job C requires no manual cutting or heat cutting, but chemical cutting of 4 hours and manual finishing 1 hour. Therefore, altogether 5 hours. So the job 1 hours, B 6 hours, C 5 hours. Now, you know, in the previous calculation you did, overhead absorption rate is 2,000 per hour. $2,000 per hour. Then to charge job A, you multiply 11 by 2,000, 6 by 2,000, 5 by 2,000. You are not concerned about the different facilities, but you are considering total hours spent for each job within the cost center, right? Accordingly, you will see job A costs 22,000 rupees. Job B costs overhead is 12,000 rupees. Job C, 10,000 rupees. Right. Now, what is the problem in this cost assignment? Can anyone say, anyone, can anyone say what was is there any issue in this cost estimate? Saminda Pereira, Saminda, anything you observe? Anushka? Okay. No problem.
So we have some chat box messages.
Yeah, that's right. Yeah, I'm just looking at, no, you're not used to see chat box. Kindly re-explain the service. That is previous one. Manjula Singh, sir, in a more complex operation, implementing ABC is a challenging task. Still no suitable software is available. No, that's why I will show you what is the problem. What is spent cost for purchase of, oh,
That is for your question, sir. What is cost? That's one answer we got.
spend cost for purchase. So no, then what I'm asking the generic meaning of cost. Yeah, then it's not the cost for purchase. No, I think generic idea, as I said. Natasha, miss, if you no, it's okay. No, not Natasha. You are there. So anyone else? I think I explained. The value of economic resources consumed is the cost. That is very important for the understanding. Actual usage is not considered when OAR is estimating. Yes, they are, I don't know. But yeah, that is a chat box. I think you can use your mic. Ne? Even I have switched my video on. All I think that should happen. That is for better results. But anyway, it's up to you. Even at least your mics you can switch on. You can talk rather than just writing. What is the problem in this cost estimation? I think you must have noted, because I don't know how we are thinking. Problem in this cost estimation is that each job uses resources differently. What are the resources available in the cutting department? Manual cutting resources, heat cutting resources, chemical cutting resources, manual finishing. Manual cutting is very, very less expensive. Heat cutting is expensive, more expensive. Chemical cutting may be most expensive. We don't know. Anyway, it is expensive than manual chemicals. Manual finishing may be less expensive, right? Therefore, different jobs consume different types of resources in different amounts. That's a case. But we charge each at the same rate, 2,000 rupees per hour. See? Here also 2,000 per hour. Here also 2,000 per hour. How unfair. Job A also 2,000, yes, 2,000, 2,000, 2,000. So what does it mean? We treat each job consumes equal amount of resources. Equal resources. Say difference occurs only depending on how long they use these resources. That's the question. Therefore, problem is that in that case, job A uses manual cutting only, but it is charged with heat cutting, chemical cutting, and manual finishing. Job B consumes only manual cutting and heat cutting, but it is also charged for chemical cutting. Similarly, job C does not consume manual cutting, but it is charged for manual cutting. It doesn't consume heat cutting, but it is charged. It consumes chemical cutting, charged, manual cutting, charged. So then that's why the problem is that under this method, for some resources which have not been consumed, but we charge. That's a problem. Therefore, this does not show a real resource consumption. Resource consumption is the cost, therefore, it does not show a real cost. That's why we say it is not the cost. Therefore, absorption costing does not provide real amount with the sense of cost. That's the main issue in absorption costing. Right. So we must know that using absorption costing in an organization, we are coming to an estimate of cost, which is not really reflecting the cost. The cost means the amount of economic resources consumed. So that cost includes even resources not consumed. If the heat cutting is available, that resources, whether it is not charged, we charge for the product, right? Then now to resolve this, what we can do, we consider these each resources within the cutting department separately: manual cutting, heat cutting, chemical cutting, manual finishing. So we could see that there are cost, expenditure for the period, and hours available under each facility. So we can see 170,000 hours available. We can work 200 hours, therefore 850 per hour. It costs. Similarly, heat cutting, chemical cutting, manual cutting has different rates of overhead if we consume. So then that we can see that it is much better than considering all together. Then accordingly, how do we charge? Job A consumes 6 hours of manual cutting, therefore 850 to 6. 5 hours of manual finishing, that is this manual finishing. Therefore, cost comes to 10,100. Job B consumes 1 hour of manual cutting here, 2 hours of heat cutting here, and 3 hours of manual finishing here, 12,000. Job C, 4 hours of manual cutting, 4 hours of heat cutting, chemical cutting, 4 hours of chemical cutting, 4 into 4,000, 1 hour of manual finishing. This should be plus manual finishing. So total comes to 17,000. Now these are the cost. Job A costs 10,100. Job B cost 9,850. Job C cost 70,000. So I have to ask you which cost estimate. This is the overhead absorption based cost estimate. This is the activity based cost estimate. I have to ask you which cost estimate is reasonable, but unfortunately, you are not answering my questions in the online. That is the nature of online sessions. So I will give the answer as well. ABC gives the better estimate. Why? Because ABC really assesses resource consumption. Resource consumption makes up the cost. But overhead approach does not assess resource consumption. It is just charged on at a uniform rate. Therefore, this is not a fair estimate. So then we can see what the result is. Job A, 10,100 is the fair amount, but we charge 22,000, overcharged by 11,900. Job B, we should have charged 9,850, but we have charged 12,000, overcharged. Job C, we should have charged 17,000, but we have charged only 10,000, therefore resulting in an undercharge. So this is the distortion. So therefore we can say absorption method is misleading in situation where different products consume different resources within a cost center. But if the different products consume same resources within a cost center, in that case, absorption method is, as far as fairness is concerned, okay. But the problem is that it doesn't support the decision, but it gives a kind of a reasonable estimate if there are products consuming same resources, not different. In that case, even ABC or absorption basis both will be okay. But if there are on different products consuming different resources within the cost center, then totally absorption method is misleading, right? Say, for example, in a sewing department of a garment factory, maybe some general stitching, sewing machines as well as embroidery machines. So then they consume different resources. But then we may charge overhead and be using the same overhead absorption rate. That's a problem. So I hope you understood. So this is how the whole what I explained in a single page I have showed you. And absorption method using a similar single rate charging like this. But under ABC, we charge based on each separate absorption rate for different job times based on consumption. We charge like this and result. Yes, I think quickly now I have to finish. Then I hope you understood the why do we need ABC. Then when we come to cost estimates, I think I would like to share my experience. And you may learn in textbooks that direct labor is an element of over product cost of production, but practically it is not a direct cost. You in the world you don't find normally direct labor because nowadays workers are paid monthly, right? And allowances are paid, and workers are used for different other purposes like meetings and machine breakdowns and maintenance and various other things. Therefore, practical world, that's even Japanese accounting also believe there is no direct labor. So this is a real life experience. This is how I the calculated overhead or the total direct cost. Even sometimes we may identify when we are preparing yogurt, even gelatin may be a indirect expenditure because we don't know exactly how much of gelatin is used per yogurt cup. But in such a situation, we go for batches. It's a 610 liters of batch. Per such a capacity, we are using a 1 packet of gelatin. Then that becomes direct. That's why, so they have in that organization, they have a very clear cut amount of ingredients per 600 liter batch, 610 liter batch. Then that becomes a direct cost. This is how we calculate direct cost. Therefore, what you are learning is that we have to identify direct cost only as far as the materials, and then there may be some direct expenditure like maybe some outsourcing charges, maybe some patent charges like that, if there's any other direct. But other than that, only direct material we have. Then from ABC, we get overhead like this: milk, reception and standardization, engineering, energy cost, packing materials, storage, quality assurance, yogurt making. These are the activities identified, right? For each activity, we know what is the cost. These are in the real life situation, what I have done, right? So therefore the total cost, and then we can assess the factory cost. And factory cost and let me check. Yes, factory cost and factory price, and therefore contribution and contribution margin. These are very important for organizations because in the factory we can see what is the contribution from each product. We shouldn't go for a profit because you can't take even head office expenditure for products, even though textbooks may say, but practically it's useless because head office affairs are totally different from the factory. So you can't assign head office cost to the factory products. Then the factory product cost is totally distorted. Then that's why that is another deviation from textbooks, right? So this is something you can see from ABC. And now I'm showing you what we can do, what benefits. Therefore, here, what benefit is that now compare this with a overhead absorption rate. Here you are getting only overhead. Overhead, only amount of overhead may be total like maybe 65 rupees per cup. Only single figure you get. Maybe production overhead, either maybe variable or fixed, something like that. So then this figure, you can't do anything. But here, when you get overhead under activities, managers, they can pay attention in the reduction. Okay, they can see, oh, right, 899 rupees incurred for packing materials. Yes, that is very significant. What action we can do to then definitely attending that need, they can bring down, if they can, let's say, bring down the cost. If they say, if they can introduce the packing material with 6 rupees, they can bring down the cost by 299. That's a very definite solution they can bring. Again, quality assurance, storage, right? Storage cost 1 rupee and 17 per cup, right? So if they can bring, let's say, storage, let's assume it is given to a certain another private vendor to keep the storage. We transfer from factory directly to a maybe internally fixed, organized another company, storage. They may say that we can store 1 unit for 1 rupee. If they can say, we can outsource storaging cost by reducing 17 cents of overhead. See, very definitely we can take decision for action. We are outsourcing storage function, reducing 17 cents. We are introducing a new packing material, reducing 299 rupees. Like that, right? These are that's the use of ABC. If you don't have ABC, you are blind. You can't take any action. Then next outcome is performance budget. Now you can use these activity data for performance budgets, right? Okay, so then I think you can see we are budgeting this time. This is actually a situation which I did ABC for a certain regulatory body. Even for regulatory bodies, we can do normally absorption costing very difficult. Now they are dealing with some subsidy scheme, then receiving application, one activity, number of application they are going to receive. To process one application, it needs 15 minutes. Number of applications they are going to deal with, 80 applications, right? So the total cost will be 1,200 rupees, and driver number of, that is per application, 180, like that. So for the period, activity cost is this much. For this activity center, regional office, 682 is the hourly rate for any activity center. Actually, activity cost pools, we have discussed. Activity cost pool is any like a cost center, because all the cost centers become activity centers. In activity center is a activity pool. For each activity center, we can calculate overhead. I think that we have no time now. Then activity sheets, we can have another output activity sheet. Now this is actually is another organization, finance department. It's a different organization, right? Finance department paying for electricity. It's a major item. Paying for electricity, number of vouchers is the driver. How many vouchers per voucher time? Then we have a cost center, that is activity center cost. Then accordingly, this is the total cost, and like that, we can see to process an electricity payment set of bills. These are the costs to be incurred. Like that, each activity cost you will understand. Then even with this, you can prepare a dashboard. We did it actually. We did it within one sheet on one screen. We can have product ingredients, input prices, production requirements, production volume data, product prices, contribution, like that. So the business managers can change different variables and see the result. So because all are connected with the activity sheets within simply with Excel, we can do. I think there was one question in chat box asking software. No, don't worry. We can use ABC with simple Excel, but methodology we must know. Right, now I'm coming to the last slide. So cost estimate, cost assignment through ABC is based on activity cost driver, as you know very well. Then activity cost driver is calculated as activity cost divided by activity driver volume. I could see that you had worked out in even examination questions, even textbooks. Activity cost is given. So you take activity cost. Driver volume, somehow you have to find, there are some data given, you find driver volume. Then simply dividing activity cost by driver volume, you calculate activity cost driver rate, I'm sorry, here driver rate. So if you know the driver rate, like absorption rate, simply you calculate cost. Then easy. But I think there was a question asking is very difficult. She or he says, it is because no software. No, it is not because of no software. Problem is, in textbooks, activity cost is given. That's the problem. See, any question, they give the activity cost, but practically, no activity cost you find. If it is a machine department, as Natasha did in the previous one, machine department, no activities are mentioned. If there are activities, say quality assurance, how do we identify quality assurance cost? If there are some transportation, how do you identify transportation cost? That's the problem, right? So quality assurance and even production, the input inspection or something like that, different activities are going on. So identifying activity cost is the main issue. If you identify activity cost, you can do. Therefore, that's the problem in practice, but there is actually a solution. That solution is based on, we can say, TDABC, time-driven activity-based costing. That's something that will help. And also, now we are ahead. Even we can go for now ABC2. There's another new area called ABC2. That means attribute-based costing. But we can't think of attribute-based costing if we can't have activity-based costing, right? So then what we should do now, so finishing, I have come to the end. What we should know now is that absorption costing does not help business decision. There is one condition, one point. Second point, absorption costing does not produce a fair cost estimate. Thirdly, ABC gives a fairer estimate. Fourth, ABC is directly supporting managerial decisions to have better control of organizations. Then four, activity-based costing produces various options in the sense, including cost management techniques such as even target costing, activity-based management, like that. Even ultimately producing information for ABC2 like attribute-based costing. So the problem is in deriving cost, ABC cost information is activity cost, identification of activity cost. That requires kind of a different version. Actually, that version today is called time-driven ABC. Therefore, time-driven ABC has to be studied for that. I think with that, we finish my session. Now, I think even though it is said half an hour, I think I have taken more than half an hour. If you have any quick question, I'm not going to answer any, I think, chat box questions. You can ask straight away if you have any question. Thank you. Because chat box I can't read and answer, but I think you should be able to ask questions. Otherwise, I think we can wind up the session.
Sir,
Yeah,
this
please.
is Anush. Thank you very much for your session and the explanation given on ABC.
Yeah.
I'm actually working in service industry.
Yeah.
There, we are trying to do this activity-based costing for example, small activity like accepting a deposit and allowing a withdrawal kind of thing.
Mhm.
And so we go into detail, as you correctly said, to capture the service cost in such activity.
Yeah.
But Professor, I have a small question. Now, when we take the staff, at each particular cost center, so their experience and even now based on their overtime rate and all these for the government what do you call circulars that we have to pay overtime based on the experience kind of that. So then the particular activity cost of each cost center also getting you know you can't standardize it. So then we find it very kind of difficult to say now this is the activity of the organization, and for that each cost center we have a different uh, cost for each activity. So especially I see as kind of difficulty adopting this activity-based costing for service industry. Can you give some insight how we can improve on that?
Yeah, actually, it is now. I don't know how far I can explain how to do it, but it can be done. What we can do is that we must come to this idea that each cost, the activity center, you have to estimate for a period what is the amount of cost incurred, right? Including overhead, including overtime. It doesn't matter who are getting overtime, but there is a practice. In that practice, what is the amount of overheads incurred, and within that, how much of activity time is produced? That has to be done. I think it takes some time. You have to know what are the activities being performed and how much of time it is taken, and then you have to identify the activity cost driver, and accordingly you have to calculate total activity time. That's how we can bring the activity cost rate. So I think that is the question actually. That's the core area to be resolved. If you can resolve that area, then easily you can go for ABC. That's very good. I think you have come to up to that level. So I think what you can do is that you have to get the total cost, general cost for operations for a certain period, and then you have to estimate total activity time. Activity time. I mean, I can't just explain within a minute, but that is what you should do. I think we can maybe sometimes we can discuss it. I don't know whether I
Thank you, Professor. Thank you, Professor.
got an idea now.
Yeah, Professor.
Yeah.
Thank you.
You can do it, sir. Very good. I think if you can go ahead, you can do it. All right. Okay. Any
Do you
other
have more questions? If not, we can wind up the session. I think thank you very much, Professor, for taking time. As I mentioned earlier, this is your second time, and even after your morning lecture, you managed to do it, and you took extra time to elaborate the concept very well. Thank you very much, sir.
Okay, thank you, Ms. Natasha. Thank you very much. Thank you for all the participants for your patience. Thank you, Natasha, Miss, once again.
Okay. Thank you. So with that, we can wind up the session. Thank you very much, everyone. Have a nice weekend.
Thanks.
Thank you, Professor.
Thank you. Right. I think somebody is asking my contact number.
Yes, sir.
Yeah.
Is it okay?
Yeah. No
Okay,
problem.
I'll share with them. Yes.
Yeah. Thank you.
I'll share in the WhatsApp group.
All right. Okay, thanks. Bye. Okay.